Okay, we are now broadcasting to all attendees.
Good morning, everybody, and welcome. It is Friday, October 2nd, and it is 9 o'clock in the morning, or just a couple of minutes after. My name is Claire Hall. I am chair of the Oregon Housing Stability Council, and pleased to call the council meeting to order. And normally we begin with roll call, but before we call the roll, I'm going to ask Director Margaret Salazar to introduce a couple of new names that will be on that roll call, because we have two brand new council members joining us for the first time. And Director Salazar, if you would do the introductions, I think that would be wonderful.
Absolutely. I'm thrilled today that we're welcoming two new council members, and I'd like to invite them to introduce themselves to the council and just say a few words about their work and why they're joining us and their interest in the council. So we'll begin alphabetically with Mary Farrell. Mary, if you wouldn't mind introducing yourself.
Hi. Good morning. My name's Mary Farrell. My pronouns are she, her, hers. And I'm a native Southern Oregonian. I was born and raised in Medford and went to school at Southern Oregon University. So right out of college, I started the work that I still do today as an advocate and outreach worker for homeless youth as part of the education system. And over time, I realized that what kids need to be successful in school is more than what is available in schools. And so I founded Maslow Project about 12 years ago, which is a nonprofit. And we've just expanded over the years to really work with not only children experiencing all kinds of homelessness, but families as well. And a couple of years ago, we finally realized it's really hard when there isn't an end goal. And so we sort of branched out into permanent supportive housing. And we have a couple of great partnerships with our housing authority and state departments to help support not only parents who are TANF leavers, but then also just low income, have lots of barriers to housing. So that's pretty exciting. So I come to you all as a service provider with a sort of specialty in children and families and representing Southern Oregon. And we're just very excited to have a presence here today.
Thank you so much, Mary. And as I mentioned earlier, we know that your part of the state has been very hard hit with the recent wildfires. And so as we turn toward recovery, we'll definitely want to also invite your expertise and on the ground eyes to what's going on in Southern Oregon. So welcome. And then our second new council member is Ms. Candace Jameson. Candace, if you wouldn't mind introducing yourself.
Good morning, council. My name is Candace Jameson. I'm the executive director of the Marion County Housing Authority in Marion County, Oregon, and we serve all the parts of Marion County outside of the Salem-Keizer area. So the rural parts, we're talking Woodburn and Silverton and the Canyon area, which was devastated by the Beachy Creek fire. We were very lucky that we didn't lose any properties during the Beachy Creek wildfire, but we did have several voucher holders that lost their homes. So my heart also goes out to people in Southern Oregon who are still experiencing that. Prior to joining the Marion County Housing Authority, I worked for Home Forward for about a decade, and I started there as a caseworker in the Shelter Plus Care program. So I've been doing this housing authority thing for a little while, and I greatly enjoy it. And I'm looking forward to working with the council and being a bridge between urban and rural housing issues, and also making or furthering the social equity platform that I know is near and dear to you all. So thank you for letting me join.
Thank you so much, Candace. And again, you know, we've just been thinking of you and all of your community members, particularly in rural Marion County and the Santiam Canyon area. And we'll continue to work with your expertise as well as we move toward wildfire recovery. And we also know that your housing authority has done a lot of work partnering with the farm worker community to do housing development and services. So we look forward to hearing your expertise there as well. So welcome to the new council members. And now I believe we can call the roll for today's meeting.
And before we do that, I'd just like to add my own welcome to Mary and to Candace. And we had the new member briefing on Wednesday afternoon, and if it feels a little bit like drinking out of a fire hose to be jumping into the council's work, especially right now, in a way it is. But as I said on Wednesday, and I know my current council colleagues will agree as well, I think that this is really an amazing, dynamic, engaged, energetic work. And I am, personally quite excited and eager, as I know the rest of you will be, to welcome our new members. And right before we went live with the meeting, we were talking about the fact that since we've already got Mary Lee on the council, we'll have to make sure we know which Mary we're talking about. But again, welcome, and let's get going and have our roll call for this morning, please.
Thank you, Chair Hall. I would like to note for the record that Councilmember DeVries and Councilmember DeFactorum are excused from today's meeting. Councilmember Farrell.
Present.
Chair Hall.
Present.
Councilmember Higginbotham.
Present.
Councilmember Jameson.
Present.
Councilmember Lee.
Here.
Councilmember Sandoval. He raised his hand. He is here. Thank you. And Councilmember Wilhoit.
I'm here, and I'm going to request that we do roll call in reverse order every now and then, so I don't feel like I'm at the end.
Yeah, what are those words? The last shall be the first, and the first shall be the last. But excellent suggestion.
Present. Welcome to the new members. I just wanted to say welcome. Glad to have you on board.
All right, next up we have public comment, and I'm not sure that we had anybody who indicated in advance they wanted to offer public comment, but I will open the floor right now to see if there is anyone on the line who wishes to do that. And if anybody would like to raise their hand and be recognized at this time, please
I'm
indicate.
looking at the attendees list right now for any raised hands. And we have one raised hand. Rob Prush would like to address, and I will allow him to talk at this time.
All right, and before you get started, Rob, I will mention that we usually try to keep public comment in the range of 2 minutes per person. So thank you, and the floor is yours.
Good morning, Chair Hall, Director Salazar, and council members. For the record, my name is Rob Crash. I'm the Preservation Director of the Network for Oregon Affordable Housing. Thank you for the opportunity to comment this morning. At last month's council meeting, during the discussion about a preservation transaction that was up for approval, Councilmember DeVries asked whether the term of the new use restriction would be added to the end of the existing restrictive use period. Staff answered that current department policy for the restrictions to run concurrently with the existing. Under this policy, the department may be buying as few as 15 additional years of affordability with their new investments. For example, consider a year 15 tax credit project having a 30-year use agreement. Funding that project and adding a new 30-year agreement that runs concurrently would only provide an additional 15 years of affordability. Now, of course, there are many factors to consider, but I just urge the council to discuss Councilmember DeVries' suggestion and to consider starting the new term of these restrictions when the existing restrictions expire. Thank you.
Thank you. Your input is noted and appreciated. Do we have anyone else who wishes to be heard right now under public comment?
I have no more hands raised in the attendees list.
All right, then we will move on to our next agenda item, which is approval of our meeting minutes for the September 4th, 2020 meeting. And I will ask council members if there are any corrections, changes, or additions that anyone wishes to propose for these minutes. Hearing none, I would entertain a motion for approval of the minutes as presented.
Moved.
Thank you, Mary Lee. Do we have a second? Don't be shy.
Second.
Thank you, Candace. Could we have a roll call now, please?
Thank you. Council Member Farrell,
Approved.
Chair Hall,
Approved?
Councilmember Higginbotham,
Same. And I have a comment whenever that's appropriate.
Councilmember Jameson,
Approved.
Councilmember Lee,
Yes.
Councilmember Sandoval.
Abstain.
Thank you. Councilmember Woolhoit.
I would abstain as well, as I was not present.
Thank you.
And just a point of order, I'm not sure that the new council members are able to vote on that item because they were not in attendance at the council meeting. So we may have to record those as abstentions, and I'm not sure if that gets us to quorum.
I believe, Director Salazar, I believe in the past, haven't we determined, but I'm not absolutely certain on this, that abstentions do not count against the quorum, that as long as we have a majority of those present voting in the affirmative, an item would pass. But perhaps we should follow up on that just to be certain.
We'll do that housekeeping and get back to the council and see what we need to do about votes. We may need to go to the absent council members to get their vote offline.
Sure. Or perhaps bring this back at next month's meeting, but thank you for taking care of that. And now we move on to the home ownership division presentation, and I believe we have Director Perfecto to lead us off on this.
Good morning, Chair Hall, council members, Director Salazar. Director Perfecto will not be joining us this morning. She's actually been out of the office for a couple of weeks, and so, but the rest of the team is here to talk homeownership with you this morning. But before we actually have our presentation, we do have two guests joining us this morning, and I want to give them a very big Oregon welcome. We're so glad they are able to join us this morning. We have Tia Boatman-Patterson, who is the Executive Director of the California Housing Finance Agency. I hope I have your name right, Tia. And we then also have Tim, I don't want to butcher your last name, and he is the CFO, the Chief Financial Officer, also with the California Housing Authority Agency, and they're going to share with you their lending program. As most of the council has heard over the last a few years, we've been talking about a TBA program, our to be announced program. We have renamed that the Flex Lending Program, and you're going to hear Mr. Shaw talk about that a little bit later. But we have a great collaboration with the 11 Western states and our neighbors, especially in Washington, California, and Idaho. And so Director Salazar graciously reached out to our friends, and I want to turn it over to them to give you guys a few minutes. So thank you for joining us this morning.
Thank you so much for having us. And thank you, Chair Hall and council members. I am Tia Boatman-Patterson with the California Housing Finance Agency, and Timothy Sue, who will be going through a slide with you, is one of our unicorn employees. He doesn't like to take, he's very humble, but he is a absolute rock star, superstar, and we owe a lot of our success in this program to Timothy Sue, who has worked in two roles, both as the Chief Financial Officer or our Finance Director and our Director of our Home Ownership. So if you want to go ahead and share your slide, we can get started with our presentation. So between 2009 and 2013, the California Housing Finance Agency suspended its single family lending because, as you know, that was the middle of the housing crisis. And then when we began to look after the housing crisis to get back into the lending game, there was a several amount of due diligence that went on what our single family lending programs would look like. So Tim, if you would go to the next slide.
Yeah, hold on a second. I'm trying to unmute. When I share my screen, it seems like I can't unmute myself. Okay, I'm going to unmute first. Here's the slide. Okay, thank you.
Okay, wonderful. So we had a traditional mortgage revenue bond program pre-2009. And so our objective was, when looking for our new model, and I really like your name, the Flex Lending Program, because that really does sum up what we were actually looking for. But we wanted to provide a low, moderate income, first-time home buyers, the opportunity to secure responsible market rate loan. We knew that one of the biggest impediments to first-time home buyers was a down payment assistance program. And so we wanted to pair that lending with down payment assistance. And so we wanted to serve more first-time home buyers with a broader range of incomes. We knew that there were, specifically in our Black and Brown communities, folks who had a higher income but didn't have the ability to save for that down payment assistance. Mortgage revenue bonds typically serve up to 115% of the area median income. So we wanted to be able to have a broader range of incomes that we could serve. We also wanted to promote responsible and sustainable home ownership. So we wanted to ensure that we had a home buyer education, post-closing counseling. We had maximum debt to income ratios and minimum FICO scores. And because we were coming out of the crisis, we wanted to make sure we mitigated risk to the agency, both with the market and market rate risk, and on our balance sheet when we were carrying whole loans through the mortgage revenue program. So at the time, we were trying to get our credit rating back up, and we wanted to ensure that we weren't taking on the risk of servicing reps and warranties to our servicer. And so how were we going to be able to have the ability to transfer some of those risks to a master servicer or someone outside of the agency? In addition, we wanted to make sure that we were generating enough income for the agency to cover our administrative costs and to support future first-time home buyers. So between 2000, like I said, 9 and 2013, we weren't doing any single-family lending at all. And we wanted to ensure that we were helping as many of our Black and Brown borrowers through a lens of equity and inclusion. So we did all of the work necessary to see what a new single-family lending program would look like. And so with that overview and that background, I'll turn it over to Timothy Sue, our unicorn, so that he can give you the background on who we've served and how the program has evolved.
I appreciate that, Tia, and I guess I'm proof that you don't, unicorn could come in different colors, I guess. What I'm going to do is I'm going to amplify what Tia said with data. I think that we're trying to be more of a data-driven sort of model, and I think that this business that we're in, homeownership, it is about the people and it's about the families, but it is also a business. So I'm going to go through some of the data that we've collected for last year. We do this every year, but this year we're looking at the data that we produced last year. The TPA model has allowed us to serve more people, and that's the bottom line. Last calendar year, we served 14,142 families. We helped them to achieve the dream of home ownership. And although this data, I'm sure that once you guys get into it, the data of the overall state home ownership for first-time home buyers is actually not easy to come by. But with a lot of digging, that 14,000 represents about 7 to 8% of the entire first-time homebuyer market in the state of California. And While some people, let's say a big company, may look at that number like, let's say Rocket Mortgage, and may say, oh, that's nothing. But for us, that's a huge deal, because that you have to think about where we, like Tia said, where we have been, and then even perhaps historically, the peak that we achieved back in 2005 and 2006 didn't come anywhere close to this. This is about 2 or 3 times more than we have ever done historically. And on the bottom of this chart here, you can see the mix of our production. About 70% of our production last year was FHA, and about 30% was conventional. And we also have a VA and USDA program. As I mentioned, this is a people business. This is a family business, but it is also a business. And that business is important because when we generate resources, that can be put into future production or future families, right? So last year, that 14,000 transactions or so resulted in about $4.2 billion of loan production. And the TBA model has also allowed us to serve a wider range of income. This is something that Tia talked about a little bit earlier. Again, here's the data. Homeownership is definitely workforce housing. And it's true that our income in our, I guess that all West Coast is referred to as high cost state, but we probably take the prize in terms of high cost. And if you look at this, you'll see that about 70% of our borrowers last year made less than $100,000, but about 30% of them made more than $100,000. And one could sort of look at this from a policy lens and say that, well, why are we serving those people above $100,000? From my vantage point, as long as our program is not serving, let's say, that population at the expense. But generally, for us at least, and perhaps this speaks to the cultural difference, people do put down something. And so, but it's just a matter of us going in there. And like I said, if it's a multiracial family, or let's say that there is on the DU application, there is an ethnicity and there's also race, and their subtlety of sort of how they are different and what do you choose to show that as is also something that we have struggled with in terms of how do we translate the data into something like this that we can actually look at. In terms of the AMI and perhaps the sort of lack of, let's say, documented income perhaps from certain sort of communities, that is something that we'll continue to sort of look at and in some sense struggle with, in that since it is, I think that I'm sort of a neutral bystander, I believe, that this is a conforming loan product. The TBA product is meant to be a conforming loan. So within the confine of a conforming product that conforms to the GSE's guide, they use the guide as in a big G, there are abilities to use, let's say, non-standard underwriting, or let's say, like there are ways and you can do manual underwriting so that you can look at non-traditional credit metrics. So then the question is whether or not you open that sort of spigot, if you will, open that channel with your servicer to allow that. But what I would say though is that when they do typically, when you allow that, typically there are other things that come into play to try to offset accepting that kind of non-traditional credit, sort of to weigh out the risk that could potentially come along with that. And we sort of have struggled with that. So for example, we do allow manual underwriting, but the DTI on our manual underwriting is actually lower than when we don't allow manual underwriting. So that's something that, you can work through over time, but for us and for you, of course, we're trying to sort of continue to open the tent to serve more people, right?
And I think
if I could, can I add on to what Tim is bringing? We noticed also when we had our mortgage revenue bond program, and this gets to maybe some of the data, there was a lot of more paperwork, honestly. And so under the TBA model, and that's because the mortgage revenue bond program has certain requirements and certain affidavits and certain documents that you need to be in compliance with the IRS rules for the mortgage revenue bond. So when we went over to the TBA model, there were several of those documents and affidavits that we no longer needed to do to be able to conform to a mortgage revenue bond program. So we were able to streamline a lot of our paperwork and documents that needed to be filled out. So the councilwoman mentioned by the time they get through all of their paperwork, they're not willing to answer that question. Well, we did notice that just from an administrative standpoint, the TBA model required less paperwork.
Yeah, let me amplify what Tia is saying again with some data. So our turnaround time now today to approve a loan that shows up. So we intake applications from the lenders, right? Our turnaround time now is less than 24 hours. And I believe that people who have different views across the country about sort of what drives people's homeownership program. But for me, and as TSA mentioned earlier, I also run our finance department. So you would think that I want to issue bonds to do MRBs, right? But what I'm more interested about is serving more people, right? And if you, the number one thing really truly in a homeownership program is to get the lenders want to make it loans for you. And if the lenders don't want to make the loans for you, it doesn't really matter how low your rates are. And the number one thing for them, since all the lenders are sort of carrying these loans in their warehouse lines, is the turnaround time, it's the velocity of the money, it's the velocity of the warehouse line. And if you can sort of tell them that your loan's approved and you can sort of reimburse them as quickly as they can, as they want to, they're not going to look at your program very differently from their correspondent channel. And that's what you want. You want them to look at you like the rest of the business, not that you're this MRB program that takes 2 months to do. And I think that that's something to think about because, you know, for example, during the month of March and April, there were a lot of lenders that shut down their MRB program because they felt that it took too long to sit on their warehouse line, and their warehouse lenders were calling in the loan. So that's something that, you know, makes the MRB program sort of sometimes come and go. And that's exactly what you don't want, because the persistence and the sustainability of your program to always keep being in the game is what makes your program successful in the long run. Not that, oh, they have a program last year, but they don't have one now. Oh, they may want to have next year. Why? Because the lenders actually require resources to set up their system and train their people to learn how to use your MRB program or your TBA program for that matter. And that is not something they take lightly.
Thank you so much, Tim, for that incredible response to some very technical questions, very helpful. I believe our chair has now finally joined in by audio. And I also know that we could certainly ask our friends a ton of questions all day, but I know, again, that they have many, many priorities on their time. So my proposal is that we thank our friends for their time. We can always follow up offline, as Ms. Boatman-Patterson mentioned. We are in constant communication through NCSHA and other platforms. So we will continue to have these dialogues to compare notes as we make decisions about standing up our new program. But we've learned a lot from them and their experience, and we'll continue to do that. So it's just my pleasure to thank you both for your time and then turn things back over, because I'm not our chair, to our chair who has joined us.
Thank you for having us.
Thank you, Director Salazar. Thank you to our guests. Zoom is making all our lives a little more challenging this morning, and for some reason I have not been able to rejoin by video, but I am on by audio right now, so glad we are back. And before we resume the agenda, I am looking at my notes, and I am sorry, but I want to jump back, but Councilmember Higginbotham indicated, I think when we were voting on the minutes, that she had a question or observation.
Well, perhaps we could say goodbye to our guests and then get into
I'm sorry.
that item. I know you can't see who's on the screen, but
right.
I would want to again thank our guests and appreciate your time. Thank you so much for sharing that with us.
Yes, very much appreciated. And Director Salazar, since I can't see the screen, I'm going to ask if you could kind of help me jointly steer the ship for the rest of our
Absolutely.
meeting. Thanks.
Thank you again, and stay safe.
Thank
from
you all.
California.
You too.
All right.
All
back
right.
to
So,
you, Madam Chair.
yes. So Councilmember Higginbotham, if we can backtrack and give you a chance to offer the question or observation you had regarding the minutes.
Thank you. I appreciate that. Twofold. My comments are twofold. First of all, I do appreciate the condensed version of our minutes because I don't think we need to record every conversation and discussion. So I do appreciate that condensing those minutes. But I do find it challenging for myself, particularly because I missed the last meeting. And I think other people that are interested, that there's really no indication of what discussion happened. And I'm wondering if we might consider just a short pros and cons or challenges and accomplishments or something that could add to those motions that are just the motions that are listed. I think that would be really helpful. I know it would be helpful for me to just kind of keep track. My alternative is to go back and listen to the full recording to really appreciate what happened. And there's so much that happens in these meetings. So I'm just wondering if we can find a happy medium there. And then the other part of it, and it's the same conversation with the meeting materials in the packet. Generally our packet is 90 to 100 pages, sometimes more. And I do appreciate this condensed packet. I think maybe there's less on the agenda for this meeting, but just an appreciation for shortened, more condensed materials. And Margaret and I talked about this a little bit ago. And I know it's kind of a magical way to figure out the happy medium there. So appreciation and then just some consideration for maybe a tad bit more information. Thank you.
And I'll just note, we can take those comments about the minutes under advisement. We're trying to find that right balance. And then as far as the packets, the one thing I'll just mention, and I think I may have mentioned this previously, is that we're working on how to condense the transaction memos. You'll hear a transaction in just a few moments when we're moved to the rental housing portion, but we are trying to make a move toward condensing that material. And you'll see that reflected in next month's packet.
I appreciate that. Thank you.
All right, we are ready to move along now and still on schedule and even a few minutes ahead of schedule with the Affordable Rental Housing Division presentation.
Actually, Madam Chair, we still have more in-home ownership. So we're not quite.
I'm sorry, that's right, that's right. My notes got a little scattered, so actually we're picking up, I believe, on the bond loan approvals, correct?
That's right.
Okay. Director Freeman, I believe, or Manager Freeman, I believe you have this one.
I do. Thank you, Chair Hall and council members, Director Salazar. I do have one Oregon Bond residential loan file for your approval today. It is a property in Jackson County. And for our new 2 council members, we bring Oregon Bond residential loan files to council when they are at 95% of the purchase price limit. And I know we have a fact sheet, so I'll make sure I get that to Shaloa that explains our program a little more in depth. But these loans are underwritten by all of our approved lenders, so they meet the Fannie, Freddie, if it's a VA loan, they meet all the lender requirements. We are really the investor on the back end. And so it's really coming to you, not for any exception, it's just coming to you because of where it falls within our requirements for a loan file to come to the council. And really it's just a consent item. There's really no discussion, but again, it meets all of our programmatic requirements as far as income limit, purchase price limits, and it's already been approved by the lender. And with that, I would look for a motion to approve this file.
I move approval.
And do we have a second?
Second.
All right, could we have a roll call, please?
Thank you, council members. Councilmember Farrell.
Before I respond, I guess I do have a question. Are these properties that if, we were, let's say hypothetically, to have involvement with in some way or another, that you need to declare a conflict of interest, or is this just consent approval? And trying to work my way through the where I need to disclose even potential conflict there.
That is a good question. I don't think we've had that one come up before. I would imagine that we would want to understand potential conflict.
What are these two? I saw in the minutes for September something about Creekside, for example, in Jackson County, and that is a program that we are involved with as a service provider. We don't have a financial stake in it, but it kind of got me thinking, like, at what point do I need to disclose that our agency has some sort of connection? I don't know what these two properties are. I'm looking in the materials. Can you just tell me what the properties are?
I can jump in and then Director Freeman can fill in. So these are single family homes that are receiving mortgages through our homeownership lending program.
Okay.
This is first
Then
time.
we would not have an interest there, but.
That's right. Yeah, typically that would not. And then when we get into the affordable rental housing piece, that's where typically we've had some items before where council members had engagement in some way, and that's where we would want that to be disclosed at the top of the item.
Perfect. I wasn't sure what these properties were. So that being said, I approve.
Excellent. So if we could continue the roll call.
Thank you. Councilmember Farrell, for the record.
Approved.
Thank you. Chair Hall.
Approved.
Approve.
Councilmember Jameson.
Approved.
Councilmember Lee.
Yes.
Councilmember Sandoval.
Yes.
Councilmember Wilhoit.
Yes.
Thank you. Motion passes.
Thanks, everyone. Now I believe we're on to flex lending programs.
We are, and I'm going to turn this over to Scott Shaw, who is our senior program analyst, who brings a wealth of knowledge to the homeownership division in reference to working with this program. You've heard a great success story with California, and if we were to have any other state join us as well, you would hear those success stories. We have been working on this program probably off and on for the last 4 years, really talking about how this would integrate with our current existing Oregon Bond Residential Loan Program. Scott joined our team the end of March and has been hitting the ground ever since. So this is our briefing back to you with where we are in program discussions, the community outreach that we've done over the last several months, and kind of just some thoughts around where we are. So at that point, Scott, all yours.
Thanks, Kim. Good morning, Director Salazar, Chair Hall, Housing Stability Council members. I'm Scott Shaw, as you know, Senior Program Analyst. So the purpose of the presentation today is to brief you in regards to the progress that's being made on the new Flex Lending Program. I hope you're as excited as I am to be able to offer this new homeownership opportunity for Oregonians. The Flex Lending Program starts like any good house starts. You start with a solid foundation, and the foundation that we have is mortgage-backed securities that are in combination with TBA, which is also known as to be announced securities. It gives the agency access to the secondary markets, which doesn't limit us from a volume standpoint. Its program was formerly known as the TBA program, and we replaced it with Flex Lending because we think it more accurately describes the modernization that we're bringing forth. And the idea is, as our statewide housing plan calls out, is act as a convener, knit together services, knit together offerings, knit together sources, create a continuity that is resulting in a more seamless continuum of services for Oregonians. As Kim said, our team took a pretty thoughtful and systematic approach to development. We took 17 engagements using culturally specific organizations, business partners, grantees, OHCS's racial disparities and homeownership task force members, mortgage lenders. In fact, we even vetted it through our PPRC, which is known as our Policy, Procedure, and Rules Committee. Our executive team has reviewed it. And in those listening sessions, we welcomed everybody to bring their experience, their knowledge, their perspective, and share it. The topics that we covered were down payment assistance, and down payment assistance is something that the agency has not been able to provide before. We've provided closing cost assistance, but not down payment assistance. And it's a large part of the discussion, as we know that the down payment in our high cost markets is a significant barrier for buyers of modest means. We discussed income limits. We approached stakeholders with an overall cap and have established tiers for various product options. We discussed demographics, and the feedback on demographics, it was pretty lively and creative. Provided very good conversation. We approached topics such as preference policies for single parents and using GIS to assist with the effects of gentrification, lending in rural areas. So we created some goals, and they were pretty broad goals in the development of the program. It was to modernize, achieve equity and racial justice, focus our efforts, our data, implement the Flex Lending program, plan for future enhancements, and most is to basically adjust on the data that we receive, because we're going to acquire a lot of data. So in modernizing our program, we're modernizing our approach. We're evolving our role, acting as convener, guiding and assisting cohesive alliances, opening doors for homeownership to all Oregonians. And the goal to achieve equity and racial justice in line with the statewide housing plan's equity and racial justice priority. For our team reached out to the research department, and it was to determine the makeup of Oregon's homeowners and determine if there are disparities. Based on the data that they provided us, we found that people of color with incomes from 50 to 120% AMI ranges are less likely to be homeowners than those who identify as white. In your Housing Stability Council packet, there is a memo that we provided, and that memo has a data chart. I want to apologize. Our initial data requests included 8 income ranges, including ethnicity, veteran status, gender, and everything stratified by home ownership and whether people were renters or not. Unfortunately, working with the data research team, we couldn't get reliable enough data. And the data was suffered to a level that it wasn't reliable, let's say that. So we worked together to create a viable compromise and obviously going forward, as part of that adjust goal, is to be able to continue to work towards data improvements as sources become available, combine the data with the data we gather, and tailor the programs to the in our outreach efforts for people of color in the Latinx, Asian, Pacific Islander, Native, Black, and other communities. We're going to focus on criteria that have high propensity for utilization by people of color. And in doing that, we actually reached out to Minnesota Housing, who's a longtime leader in equity work, in order to determine best practices. And thankfully, in the spirit of furthering that mission of equity and racial justice, they shared us their best practices and their focused demographic data points, the ones that they use to achieve their goals, and they're doing quite outstanding at it. We continue to make significant progress towards the implementation of this program. We've already engaged a hedge provider. We are in the process of working towards procuring a master servicer in the near future here. With all of those items addressed, we can now focus on thoughtful program design and implementation of the Flex Lending program. Hopefully setting up borrowers for success, using our partners, and establishing long-term, long-lasting relationships. Our plan is to focus on outcomes, learn from our experiences and the data we gather, refocusing our products and our parameters to achieve our goals. And lastly, like I said, it's to adjust that Flex Lending program make it flexible and dynamic, just as it's designed to be. And as it matures, aggregate all of the data on the closed loans, review and monitor that progress, and continue to make sure that we have addressed communities of color and make adjustments and modifications as necessary. Last item I want to talk about is a rate comparison, because it has been brought up that that down payment assistance may offer an unfavorable rate to borrowers. So what we did on August 17th was we actually provided we actually hopped onto the internet, used our fingers, and we completed a pricing comparison. The results were pretty impressive. The Flex Lending program for an Oregonian who would have been able to purchase a home, basically an Oregonian would have been able to use the Flex Lending program to purchase a home at a lower rate than walking into a major bank. Along with that, they receive a 4% down payment assistance, or 4% DPA for down payment assistance and or closing costs. And we think that that's quite an advantage. Flexes some of the muscle, underscoring our Flex Lending program there. Hopefully, the information in this packet provides clarifications to some of the questions that you may have. And hopefully it sends comfort in the fact that we have done quite a bit of effort and try to create a comprehensive approach in the way that we are implementing this program. That's it.
All right, so at this point, let's open the floor to council questions or comments.
As Chair Hall, this is Charles, and I'd just like to ask a couple of questions. Scott, I appreciate the information, particularly on the heels of what we just heard from Tia and Tim out of California. The program really seems to impact the Black and Brown communities and other disadvantaged populations because they seem to be the high users, and that's what we would like to see. The question I sent out earlier, and this came up when we were first looking at this program, when interest rates are low, favorable circumstance, interest rates go up, what kind of sensitivity testing or analysis have we done, or what do we know as far as entering the program now and what might happen 2 years from now, or is that not a concern because we grow into that changing interest rate environment naturally?
I think that, so a lot of answers to that. It depends on what you're correlating it to, but if you're correlating it to rates on the street, because this is using an MBS structure that is liquid and it's quite frankly, it's the same type of structure that lenders from US Bank to a guild or something like that would use. It's going to correlate in lockstep. Occasionally, you're getting into a few adjustments to that, but quite honestly, it's those differentials are short in time frame. So
it's not anything that we're concerned about, and I'm just asking this because we have 2 new council members. We talked about the advantages of the program, our objectives of the program, and any concerns we might have. I'm looking at it from the concern side, and I'd say it's a great time to enter it when interest rates are low. So that part of it, I'm happy to see because there was some concern that we had missed a window while we're back in a low interest rate environment. So I think it's very good timing to enter. You mentioned the banks, you did a comparative analysis of rates. Is it in your wildest imagination, can you ever see the financial industry going to the state and saying, well, this is not good for our industry, you're hurting our industry? Can you ever imagine that given the populations that we're targeting and trying to serve?
No, so in my previous life, I sold to banks, and very often you end up with a banking industry is designed to do banking, not necessarily mortgage loans. I know that our perception is that they do, but the reality is that their systems aren't set up to be that dynamic and responsive. So do I think that somebody's going to say, hey, we're stepping into your territory? I don't think so. The good news is over 40 other states already have implemented a program like this. So I'm very comfortable in saying that that's not something that is very likely.
Yeah, and no offense to the banking industry, but I would say that, I'm not overly concerned about that. I just wanted to know, are they going to be a partner and a willing partner and a supportive partner? And I would hope so, given what we're trying to do. So, well, thanks. I'll yield the floor to others with questions. Thank you very much for the analysis and the presentation.
Council member, if you don't mind, I might I can't help myself to kind of piggyback on what Mr. Shaw was saying. So a couple of things, the lenders that we've spoken to are eager, because this is essentially another product and another door, another opportunity for them to help qualify buyers. So they are happy. I think our initial outreach, we have not gotten anything but, pleasure that this is another opportunity for them to do business. So that's been positive. And then on the interest rate environment, and really what we're thinking about here is having a suite of products. So it's not an either or. Right now, all of our eggs are in the mortgage revenue bond basket. And we do really well with mortgage revenue bond loans when interest rates are high, because we can come in under those loans. It's really hard right now to make that program really viable and do volume, because interest rates are so low. There's only so low we can go and still cover our costs for that program. So this will allow us to have kind of a suite of options. So when interest rates are high again, if that happens, then we kind of return back to looking at that mortgage revenue bond program. And when they're low, and so we can sort of balance that out. So hopefully that helps to answer your question, having that kind of cover our risks and have our eggs in multiple baskets, if you will.
Yeah, thanks for that.
Madam Chair, I have a question.
Yes, Councilmember Sandoval, and just for everybody's benefit, I have now been able to rejoin by video as well as audio. Councilmember Sandoval, the floor is yours.
Okay, thank you very much. So this question goes beyond Mr. Shaw. It's kind of a question for the council, and maybe I should actually know the answer to this question, but I don't. So the more the agency is relying on, this concept of culturally specific organizations, to kind of push our racial justice goals. I'm wondering if we have a clear definition of what that actually means and how we're going about operationalizing, that concept. And so so this goes beyond, I don't know if Mr. Shaw has an answer to that or if other council members have it, but it seems like we're really, really relying on this now to make decisions. So I just want to make sure we're clear about that.
I can try to field that one because it's a great question, and I will let you all know I had a great conversation with Councilmember DeFantorum on that issue a few days ago. So we are actively working to create a standard definition of culturally responsive services and culturally specific organizations, one that we can rely upon for our various suite of programs, all the way from homeless services through homeownership. It's kind of a slog, it's a long process. So we just asked for the council to have a little bit of patience with us. Our first foray into that was the conversation that we had a couple of months ago around a proposed statutory change in the homeless services arena to open up some flexibility there. We did not get that in statute because it was a sprint to get that done, and it was a very compressed time frame. But we have some language out there that we've been working on with the Department of Justice. And so our next step is to sit back down with DOJ and sort of talk about, can we adopt a standard definition that we can use in our various NOFAs, program designs, frameworks, and where it's appropriate in rules and statutes. So that is coming, and we would be happy to preview that with the council and talk that through when we have a little bit more clarity on that.
Okay, thank you. And if you need my help in that, I'd be eager to help with that as well. So just let me know.
Great, we'd love to do that. Thank you.
Thanks very much. Any other questions or comments at this point from council?
Chair Hall?
Yes. Yes, go ahead, please. Joanne?
No, Mary Lee.
Oh, Mary, okay. For some reason, Joanne's picture popped up, but now I see you, Mary.
Okay.
And I hear you, so hopefully everybody else does.
Thank you.
The floor is yours. Yes.
Thank you. So just a couple of comments. I appreciated, Director Salazar, you're talking about how our lending partners are eager and interested in this new option. And I hope that while they are expressing their eagerness and their increased interest in wanting to be in partnership with us, that we are also increasing our expectations for them in terms of their outreach, their documentation, who they're working with. And these are not new themes. We've been talking about this since I started on the council, but certainly, you know, with the old honey thing, if they are interested in what we have to offer them, we should be increasing our expectations for how they show up, where they show up with us, in alignment with statewide housing plan and our values, specifically around racial justice and equity. And towards that end, I was really interested in what our partners from California had to say about the attractiveness, about the volume and the velocity of being able to get money moving. And I wonder in these times, as Councilor Wilhoit was talking about, of, you know, high interest rates, we've seen this, and we've done this where we've cut our interest rates to be more competitive. In a low interest rate environment, we can't, as you say, cut them, but we could look at our processes, and we could move faster than the rest of the market. And I think that might be some very interesting aspect to be able to do here, because one of the things that we've all said we love about this is the flexibility and to be able to do some things where we're not so constrained by the regular environment. So I hope we're really deeply leaning into that. And towards that end, I appreciate the conversation about where the staff team has had their engagement with communities of color, culturally specific organizations. As we move through here, it would be really helpful to me, and I think to our partners externally, to see in one place every piece of work or practice or policy that we are doing in service to our equity and racial justice values and goals. So, you know, we looked, you know, I was not surprised by that data, that there was racial discrimination and disparity in the rates of home ownership, right? Like, I don't think any of us were surprised by that. Having that, and then what we're doing to address that, either because we've been recommended it from our partners, or we're testing it, or any of those kinds of things, in one single document in one place that then we can broadcast out to folks, I think would be a helpful tool whenever we're ready to do that as we launch the program. So thank you.
Thank you, Councilmember Lee. Any further feedback, comments, questions from council on this? If not, we will offer a big thank you to Scott, and this does sound like, you know, one more potentially very valuable tool in our toolbox. And now, next up, we're going to have Manufactured Home Park Acquisition Fund, an introduction to that.
Thank you, council members. Thank you, Chair Hall. Thank you, Director.
Yes.
Hi, everyone. Kim, do you want to say anything, or should I go ahead and?
Just welcome Chelsea Cato. She's been here before with manufactured housing, and she is here again this morning with us, and has a lot to share with the team. And I know a lot of you are very well aware of what's been happening in some of our communities with the loss of some manufactured home parks due to the wildfires. So welcome, Chelsea, and good morning.
Thank you. Can everyone hear me? Yes? Okay. I can't tell if I'm unmuted or not. Good morning, Chair Hall, council members, and Director Salazar. My name is Chelsea Cato, and I am the Senior Program Analyst for Manufactured Housing at the agency. I am here today to introduce the framework for the Manufactured Dwelling Park Preservation Program. Can everyone see my PowerPoint? Hopefully. Great. So just to start out, in the 2019 legislative session under House Bill 2896, we had $9.5 million allocated to this program. The statute requires that these funds be loaned out to one or more community development financial institutions so that they can create manufactured dwelling park loan funds. The intention of these funds are that they be used as essentially longer term bridge loan financing to fill a gap so that nonprofits, resident owned co-ops, housing authorities and local and tribal governments can respond more quickly when the opportunities come up on the market to purchase manufactured housing parks and preserve them as affordable. What we are starting to see is that prices are going up for parks, and it's getting even more competitive. So this serves a needed role when permanent financing might not be available. So you can essentially think of it as a sort of land banking opportunity for park preservation. And then when permanent funding is available or makes sense to do a takeout, they can replace it with refinance with permanent funds. So this is essentially, I guess, it's not a pass-through, but it would be a loan to a CDFI. In order to be eligible, they would need to already have programs in place where they finance affordable housing projects statewide. And then they would need to have the capacity to develop their own park preservation loan fund that would loan these funds to the qualified groups that the statute allows to purchase parks and preserve them as affordable. So the nonprofits, the resident-owned co-ops, housing authorities, and local and tribal governments. For loan terms, we're looking at nominal interest rates up to 1%. We want to make sure that the cost to the end borrower, is not prohibitive. So we want to make sure that there is an interest rate, but it's nominal. And then statute dictates that there will be no loan payments required before the maturity date. Statute also dictates that the maturity date can be no later than September 15th, 2036. And then we are going to require that there's a minimum leverage ratio for any of the funds that are loaned to a CDFI by OHCS in order to make sure that we can stretch these dollars as far as possible. And then any losses that are incurred, we'll expect them to be shared on a pro rata basis between our loan and the CDFI's own investment into the park preservation loan program. We are going to expect that the CDFIs submit a plan that details how the design and implementation of their loan program embraces diversity, equity, inclusion, and then also detail how they plan to market their park preservation loan fund product to the eligible entities, including how they're going to do outreach to BIPOC communities and culturally relevant organizations. So as we were designing the framework or starting to create the framework for this program, the wildfires hit. And as I think you probably already know, on manufactured housing predominantly in Jackson County, but also in Lincoln County and in Lane County. This is, a critical affordable housing stock, and we're looking at potentially a loss of about 1,700 manufactured housing spaces. That's a big hit. It's going to be really hard to come back from that. We know that there are some private park owners who are interested in rebuilding, but we have been in conversation with Representative Marsh and other partners and members of the Manufactured Housing Advisory Committee to really look at whether there might be an opportunity to repurpose some or all of these funds to help with the wildfire recovery. We anticipate that there might be some park owners who are not interested in rebuilding and just want to sell their parks. So we want to be able to, even though we're still in response phase, there are likely people that are looking at selling and people that are looking at buying these parks. So we believe that these funds could be leveraged with federal, state, philanthropic, and private dollars that will be going in for wildfire recovery. We also anticipate that a legislative fix would probably be needed. Right now, the funds can be used for park acquisition, and we might want to look at doing a fix so that they could also be used for infrastructure. And when partners preserve existing parks, they have existing residents in them. In this situation, this would basically be a rebuilding of a whole new park. It's going to take time, and we would look at some of our other resources to help put new energy efficient homes in there. And so we would expect, I think this is an opportunity for developers to prioritize these new spaces, not only for residents who were impacted by the fires, but also for BIPOC community members who might not have looked at this as an option for affordable home ownership. So we have an opportunity there that we might not have normally if you're preserving an existing park with existing residents. And that is it. I really would like to just hear feedback from council members about this idea. We've started looking at it. Of course, if we determine that this is a viable and feasible path, we'll come back with more information and more input, but really just wanted to get input on whether or not there's partners or stakeholders we should be talking to, as well as just your thoughts on looking at repurposing these funds, maybe all or in part for the wildfire recovery. Thank you.
Well, thank you, Chelsea. And I want to start with an observation and just one question related to your presentation, and start off with a thank you. And this looks like really a very thoughtful and yet very quick pivot to be part of the immediate response we need to these fires. And you mentioned that park prices are going up, and I could speculate on the reasons why, but I'm just curious if we've got a really good sense of what the main drivers of that are right now.
I'm not sure I can. I think, with the market heating up, the need for affordable housing, and for private investors, parks are a good investment. So I think, we have in-state and out-of-state park owners that are interested in either expanding their existing portfolios or getting into the business. I think the prices that we're seeing don't necessarily make sense. And, with park ownership for private investors, they are putting their resources into the land and infrastructure, but almost always, or the majority of residents in these parks are renting the spaces, but they do own their own homes. And so it's a lucrative investment where you don't have to worry about, taking care of the envelope if it's affordable rental housing, but you're just worried about the infrastructure and the park itself.
All right, that is helpful, makes sense to me. And now I'd like to open the floor to the rest of the council for comments, questions, feedback.
Chair Hall, I don't know who you can see, but I have a question. This is Barb.
Yes, I do hear and see you, Councilmember Higginbotham, so the floor is yours.
Thank you. Chelsea, I was just wondering about manufactured home parks where potentially homes are damaged, but they're not completely gone. Are there opportunities available for those homeowners that could repair those homes at this stage? What does that look like?
So yeah, I think you're right. We're still trying to get a really clear picture of the extent of damage. We know that there's some parks that the homes seem to be okay, but the infrastructure is damaged. So technically the homes aren't habitable because people don't have water and sewer. In some cases, we have parks that have a significant number of homes damaged, but not all, and then parks that are completely destroyed. It's going to take a while to do the cleanup because we're looking at hazardous materials, particularly with older manufactured homes. So I think there will be, I guess there could be homes that could be fixed, and it might be that we could repurpose some other funding. I don't know if weatherization, but some rehab and repair funding to fix those homes. But if the infrastructure was damaged, then if it's privately owned, the park owner is going to need to use all the resources available to get the infrastructure back. I do also have, and I brought this to council last month, the manufactured home replacement program that we're one piece of a layer of funds to help manufactured homeowners replace older homes. Those funds need to be used right now either on land that a manufactured homeowner owns, so fee simple, or in a preserve park, or they could be used technically in a park that's privately owned as long as the park owner is willing to sign a regulatory agreement to, around affordability. We're expecting that they will probably be targeted first for preserved parks. And so there could be opportunities to think about coupling those with some of these dollars to get parks purchased. It may be that there are park owners who aren't interested in selling. I'm hoping that there will be a few, and our partners are already looking into that. But maybe there would be an opportunity, if that's the case, to build a park new and then put these resources into it. So I think we can be creative and flexible with the resources that we have. They're not going to go really far. Right now, my replacement funds, might go towards about maybe 40 loans. And we want to maybe prioritize some for wildfire recovery, but we do want to continue with the program as originally intended so that we can do a proof of concept to show that this is a good product and successful and get some lessons learned. So it's early on, but I think we have some great partners involved, and there's been a lot of conversation trying to think creatively about how we could leverage resources that we already have with future resources that might be coming.
Thank you. I appreciate that. That's really important.
And I was just going to say that, as you see, 1,700 spaces lost. We need everyone rebuilding who can rebuild. So we want to see private owners rebuilding as well. But we do want to make sure that, if there is an opportunity to preserve some of these so that people can get into them and experience some wealth building opportunities because they have that stability of land and tenure and rent.
And I was just going to piggyback on Chelsea's presentation to say, and you'll hear more about wildfire later in the director's report, but in general, where there might be opportunities to frame some of our existing programs, modest investments to help is important. And we really need people to take advantage of those FEMA assistance resources first. And that is the message that we're trying to drive home consistently. So if folks are able to get dollars from FEMA to repair their homes, if we don't sequence that well, if we put state dollars in first to assist a homeowner, they may not be eligible for those FEMA dollars down the road, and then we've left federal dollars on the table. So we just have to be really thoughtful about how we pair this all together.
Director Salazar, could I follow up on that point? And the question in my mind, I'm thinking of the many people who were manufactured homeowners, either who were not insured or significantly underinsured. And at least preliminarily, what I'm hearing is even if they do get FEMA aid, that alone will probably not be enough for most of them to replace their dwellings. So I'm sure it's already in conversation and process, but that a way to, essentially have them start with a foundation of FEMA money, but then state resources or other resources to help get them to the point where they can indeed have a new home.
That's exactly right.
Mm-hmm. Okay.
Can I just make a comment? And it's probably just more of a question about the FEMA resources. My understanding is that to really cash in on those resources, it's a long term. I mean, like a year, it could be a year process. Is that true? Do we know that?
I don't think FEMA would commit to that on the record, but anecdotally we've been having lots of conversations with states that have gone through disasters, and it's several months.
On the hopeful note, frankly, I don't know the exact number, but I know Lincoln County FEMA has already received over 400 individual applications for assistance. Some of them have already been kicked back, either because folks don't qualify or because of errors in their application submission. but I've heard at least through staff of at least a few cases where folks have already received their checks. So
That's right.
we'll hope for the best, but realize that for some folks, this could be a very long process.
That's right. And we can follow up. And again, I know we're taking airtime on wildfires now, but we can certainly follow up with the council with the updated numbers on the amount of Oregonians who've already received their benefits. It's actually pretty significant. So there is some hope there. But just as we think about our program design for manufactured housing, we have to be thoughtful about how this all comes together. And I just want to applaud Chelsea and the business partners that we've been working with on our advisory committee to help us think about this particular kind of stock, which is already complicated and really endangered, and how we think creatively about it in this moment.
Excellent. Any other council members who wish to be heard with questions or feedback on this topic?
Chair Hall?
Yes.
Councilmember Lee?
Hi, yes. There was a little lag, but I see you and I hear you. Yay, the floor is yours, Mary Lee.
Thank you. Thanks, Chelsea, for the presentation. It was really clear and understandable, and I appreciate that. And I appreciate the work that it's representing. In terms of your first question about repurposing these funds for wildfire recovery, I enthusiastically support this. I think, as Director Salazar, many people said, we don't have enough in any one place to really do what needs to be done. And if we do a little bit here, everywhere we can, I believe we will have positive impact. So I absolutely support this thinking about repurposing this program, with the caveat of I do not want us in service to urgency to leave behind all of the work that has been done on this program to make sure that we are taking care of our commitments to equity and racial justice. I appreciate the ways in which that was referenced in the presentation, and I really don't want those considerations to fall by the wayside in an effort that feels pushed with urgency. I believe we can have both, and I believe we can do urgent work and not leave behind our values and our commitments there. I also really think about, is this another opportunity, as you, I think, hinted at, for us to look at ways in which we are converting to ownership of the land by the people living on it. We've had a lot of discussion here about that's a priority for us because it builds wealth and assets that are in addition to the actual dwellings, because in many cases, these dwellings are not all that big of a resource. But there is a resource when there is a collective ownership of the land, and if they go into a land trust and all of those kinds of things. And we've talked many times about just the power of that we leverage the dollars for housing, but we're also leveraging for asset and wealth building for the people in the park. So just wanting to apply those kinds of opportunities and lenses in this repurposing for wildfire response. And then finally, and again, you don't need to answer this, appreciated the slide about racial justice and what will be required of the folks who are going to take advantage of these funds. And I'm curious about how we will evaluate people's responses to our questions, right? So we've got two questions: sign the DEI, and how might you look at living out your DEI commitments? And I'm wondering how staff will evaluate the responses, and whether or not there is a minimum standard of response that says, yep, we can generally say this person or this organization is working hard, and other places where we know that there's a pro forma response to it, and what, after we've evaluated it, what, if any, action will be taken as a result of that evaluation. It's one thing to ask, it's another thing to assess, and then it's even a third thing to say what happens once we've assessed. So those are my three comments, and I'm in support of this.
Chair Hall, I have a comment.
Yes, is that Councilmember Sandoval?
Yeah, this is me. Can you hear me okay?
Yes, just
Okay.
fine. The floor is yours.
Great, thank you. So I had, I guess, two points to make. One is that, yeah, I definitely want to piggyback from what Councilwoman Lee just said. So I'm a big fan of the co-op model. And so I'm wondering if there's any way we can prioritize funding, to those manufacturing parks that use the co-op model. And then in terms of people of color, if there's a way to link like the co-op model to also doing outreach and prioritizing the funds to go to communities of color, I think that would make a really good difference. So basically combining the co-op model with focused on people of color. My other comment is a little bit more, I don't know, I guess it's a little bit more problematic, but when you're thinking about wildlife recovery, as a planner, I also think that if we're just gonna build in the same high risk areas where these manufacturing housing are currently built, that you're gonna end up in have the same problems. And so I don't know what we can really do about that in terms of this agency. One suggestion would be to work with the Land Conservation and Development Commission, because I know we're thinking about how to rebuild in after these fires in ways that are more kind of sustainable. And so it's a difficult question because the land is there and people need their homes right away, right? But at the same time, we don't want to be replicating the problem, especially as the wildfires are going to seem to be like something that's going to be reoccurring.
I could just quickly respond to that comment, Council Member Sandoval. It's a really important one. And I will just say, you'll hear later, again, a little bit, I'm giving you teasers, but we are running the State Disaster Recovery Task Force. And one of the things that we're trying to do is really keep everyone focused on that long view, and that this is going to take real comprehensive planning and conversations at the local level to make big decisions. So everyone is wanting to be helpful, and our hearts are hurting for people that are suffering. And we also have to make sure to make space for those big conversations. So we're carrying that and hear that comment, and DLCD is involved in that task force with us.
Thank you, Director Salazar. I'll just echo that. We've been in conversation with DLCD to think, creatively about how we can address this. There might be opportunities if there's a housing mission with FEMA to look at, really converting whatever comes in to make it permanent. So we're talking to a lot of partners through that housing task force and various regional task force to identify the best way to approach this. And as Director Salazar said, it is going to be a long-term recovery process. And I just wanted to quickly address your comment about prioritizing funds for resident-owned co-ops. I think that's a great model because it allows the residents in the park to take accountability and ownership for their community. In this situation, because it's going to take so long to rebuild, people are going to move, and some people may come back, some people might not. So I anticipate that probably for funds that are prioritized for wildfire recovery, there'll need to be a nonprofit or housing authority that owns it in order to get it set up, because we don't have the existing residents, and then look at opportunities to basically give those residents, they can make the decision whether or not, the choice, whether or not they want to, live in a nonprofit owned park or be a resident owned co-op. Because I think for some residents, they love it. It's a great opportunity. Some are happy with nonprofit ownership. And I think it's really important that, one agency or one model, we want to preserve as many of these as we can. So we really need to hit it with multiple approaches. And so I think this, our statute calls out that funds can be used by housing authorities or resident-owned co-ops or nonprofits and tribal governments. And so I think it's great to kind of have this comprehensive approach where we can tackle it from different directions if we need to.
Excellent. Any other council input at this point?
If I could, Chair Hall, I just
Sure.
wanted to thank Chelsea for the report and for the very important work. And I'm sure you've already crossed paths with Meyer Memorial over time, because we have made some significant investments in the manufactured housing area, and it's a priority area because we recognize there's critical need across the state. So I would just throw that out there. If there's something that can be done in conjunction with Meyer from the perspective of identifying the need and prioritizing the need in a collaborative manner, focusing on the things that Councilmember Lee and Councilmember Sandoval have emphasized with regard to equity, I would strongly encourage a phone call because I know they will be receptive. Thank you.
Thank you. I have worked for a long time with Michael Parkhurst and Teresa, so definitely want to include Meyer in that.
Thanks.
Okay, thank you, Chelsea. And I believe at this point, we're ready to roll into the Affordable Rental Housing Division. And it looks like we've got one transaction to hear about.
Well, and sorry to be a pain. I read
no.
the material. I noticed that Ankrum Moisen is involved. Ankrum Moisen is a client of mine, a recurring client. So I want to disclose that. I don't know, we're having some potential conflict excitement in this particular call, but I want to look at the Executive Director Salazar and you, Chair Hall, to decide what, if anything, I need to do differently.
Director Salazar, I'll defer to you on this.
I believe disclosing that is sufficient because you don't have a direct financial stake in this transaction.
Okay, thanks.
Excellent. So I believe, is it Director Cody who's going to tee this up for us?
Director Cody, I believe, she has another conflicting engagement, so I will turn it over, I think, directly to Joanne Sheehy to present the action. And I know we're woefully behind a schedule, so we will try to make up a little time.
All righty. So this is, good morning. This is Joanne Sheehy. I'm production analyst for the Affordable Rental Housing Division, and I am requesting funding consideration to support the construction of 115th and Division Apartments located in Portland, sponsored by Related Northwest and Central City Concern, and detailed project information is included in your packet starting on page 18. The planned development will help advance housing priorities set by OHCS and the statewide housing plan. The project is a recipient of funding involving a new joint venture to address the increasing homeless population and lack of sufficient affordable housing, where PHB, the Portland Housing Bureau, the Joint Office of Homeless Services, Multnomah County Health Department, the Mental Health and Addiction Services, and OHCS are combining resources to focus on serving individuals who are chronically homeless and to provide much needed housings for the families. The project is being supported by construction and long-term financing, as well as an annual operating service funding for the 7 PSH units on this site. And I don't know if you guys remember, but we funded the Division Street, which is down the street, which is almost all PSH units. 115th and Division will have a full-time resident service managers to help coordinate support and services to the tenants and the families. 47% of the units in this project are family-sized units. IRCO, the Immigrant Refugee Community Organization, will be a community partner, providing referrals for lease-up, as well as developing culturally specific programs upon lease-up of the project. An exciting part of the project is that it is also partnering with the Boys and Girls Club of Portland to provide after-school programming and club activities when COVID might change that a smidgen, but they will have a dedicated space on site. A total of 138 units will be restricted at 60% MFI. And the development teams have demonstrated they have the capacity to complete the project as presented. OHCS staff have reviewed the proposal as well as the applicable state and federal program standards for compliance and completeness. The development confirms to OHCS, lender, and investor underwriting standards. Today, Housing Stability Council is being asked to consider the recommendation and motion put forth by the OHCS Finance Committee to proceed with the tax-exempt bond sales of $21,200,000 as reflected on page 18. I'm happy to discuss any questions that you have on the materials presented. Otherwise, I ask that you consider the motion in your packet. Thank you.
Council members, questions for Joanne? Well, this looks pretty straightforward. All the T's dotted and I's crossed, but no, this is great. So hearing nothing from the council, I will entertain if someone would like to make the motion on page 18 of our packet.
So moved.
Okay, was that Barb?
Yes.
Okay, do we have a second?
There's a second. Charles.
And that's Charles with the second. And now if we could call the roll, please.
Thank you, council members. Councilmember Farrell.
Approved.
Chair Hall.
Approved.
Councilmember Higginbotham.
Yes.
Councilmember Jameson.
Yes.
Councilmember Lee. Councilmember Lee.
She doesn't appear to be at her station right now.
Yes, okay, I'll move on. Councilmember Sandoval.
Yes.
Councilmember Wilhoit.
Yes.
And looping back to Councilmember Lee.
Appears to be away from her station. Do we have enough votes to pass?
We do.
Okay.
We do.
Okay. And I guess we can just record her as not voting for this one. So we do have an approval. Wonderful.
Great.
Thank you very much.
Thank you. Appreciate it.
Thank you. And we will move into the Housing Stabilization Division report. And I believe Director Andrea Bell will be setting the table for us.
Thank you, Chair Hall. Good morning, Housing Stability Council, Director Salazar. It's good to see everybody, and special welcome to our new Stability Council members. I just want to start by acknowledging that I'm sure that there are folks listening in today that have been impacted by the wildfires, and so our hearts are with you, and we look forward to being of service to you in recovery. As noted in your council packet, Housing Stabilization is bringing forth 2 briefing items today, so there is no vote being sought. I know we're short on time and trying to make up for it, so we'll start with winter shelter, and we will look to be as brief, as concise as we can, because we have some very vibrant discussion we hope to get into with IDA. So just to set the context for the current state of the world as it relates to shelter. So even prior to COVID-19 and the devastating impacts of the wildfire, the state of Oregon had very limited shelter capacity in relation to the unsheltered need. This is exacerbated for both service providers as well as our shelter capacity. Many of our service providers across the state from both urban and rural communities have reported that they have a decrease in shelter capacity. In part, much of this is attributed because of social distancing requirements. And so in effort to be brief here, I want to just kind of highlight 4 key areas for the council as it relates to our winter shelter strategy, which is this year is going to take everything of us. This is going to be a very different year for winter shelter, in which we need to prioritize non-congregate sheltering in order to prioritize the public health and safety of Oregonians. And that means that we need to leverage every single federal dollar available to us. Secondly, in alignment with our goals of being of service and prioritizing our being of service to our Black, Indigenous, and communities of color. Obviously, those communities were disproportionately impacted amongst the homeless system, but also via COVID and wildfire at 2. And so it's just a reminder for us to put that theory into practice when we make these investments available and work to put our strategy together. Lastly, it is the role of OHCS from a funder's perspective to really make sure that we're not taking a copy and paste approach. And so each community shelter system is appropriately going to look different. So this is about meeting communities where they're at. And then lastly, this is also a time where we're going to have to really double down on our efforts and investments around infrastructure. We have to prioritize investments for infrastructure so that as we work to really make those bridge of connections between shelter and housing, that we have immediate shelter infrastructure available. And so with that, I will turn it to Assistant Director Leanne just to kick us off with some of our policy and implementation for this year's winter shelter strategy.
Director Bell, and good morning, everyone. As Director Bell mentioned, Oregon is currently facing having very little shelter capacity, and paired with being in a space and time of concurrent crises, it will really require us to be thinking of new ways of creating and operating shelter, especially as winter is rapidly approaching. What this also does is it requires us to show up and deeply reflect on how we work with our partners in the overarching work. So we've been doing a lot of thinking, particularly around at what altitude do we need to be to ensure that we create the scaffolding and framework for successful outcomes for those we serve. We also know concurrently that our community partners have been doing this work for a very long time, and our goal is to support these ongoing efforts, both in a space of COVID and in normal times. We also want to be particularly considerate of the disproportionate impact of housing instability on our communities of color. So OHCS and the Housing Stabilization Division is working to engage in a new type of relationship and partnership with our providers. We've been having many collective discussions regarding the highest and best use of those partnerships at the state level. So really the question is, where do our grantees need us to show up? There are a couple of things that we've determined. Our grantees need us to outline what funds and resources are available, both fiscally and programmatically. How do they access those funds and resources? What do they then do with those funds and resources, which is that whole pulling together and sharing of knowledge? And then how do we apply those resources and best practices in spaces that are applicable to the bottom line or the outcomes that we all hope to see? So really in thinking about this authentic engagement, sharing out of best practices, and then also supporting the use of those best practices within the system, our ability to organize, convene, and build knowledge allows us to more authentically partner and also collectively learn together to better impact our system now and in the future. So both in spaces of crises and also back in normal times, which I'm putting in air quotes, as we all know, the new normal may not be normal. And so really non-congregate is and has to be our new model for shelter in or out of a COVID-19 environment. And so our attention to both housing and health disparities, a space of innovation, and braiding and blending multiple sources of funding and resources is really the only way we will ensure the health, safety, and well-being of our statewide communities. So to talk more about those multiple sources of funding and resources, I'm going to pass it over to Assistant Director Savara for more details specific to those investments in winter shelter.
Good morning, council members, Chair Hall, Executive Director Salazar. I am happy to be with you this morning to kind of discuss some of the resources that OHCS is strategizing and looking at for making sure that our winter shelter response is as adequate as it can be. I want to caveat that by recognizing that these resources are insufficient for the need. We really need additional support and investment to make sure that we're able to really respond to the level of need and the crisis that's at hand. But I'm going to outline some of them and also just mention that our most important resource is really just the folks that are on the ground in these shelters, giving a warm smile to someone who's coming in off the streets, maybe having, sitting with someone over for a cup of coffee and just kind of chatting. The staff and volunteers that are our direct service providers are really our most critical asset, and that these resources, these funds are just a representation of the amazing work that they do and that our partners across the state are doing every day, and especially going into the winter. So I'm going to outline a few of the sort of high level resources that OHCS is really targeting for this winter. So every year we have the Emergency Housing Assistance Program as well as the State Housing Assistance Program, also known as EHA and SHAP, for assisting folks with making sure that they have adequate access to both support for getting out of homelessness as well as maintaining structures in the shelter system at large. So our community action agencies have a deep level of knowledge and expertise at administering those funds. Those are state general dollars, and we do anticipate those to be a critical resource for us moving into the winter. However, knowing that the additional cost of congregate sheltering and social distancing is going to take more resources than we've ever had the need for in years past for winter shelter, I do want to outline a few other critical resources. One of those is the Emergency Solutions Grant, which had an additional allocation from the CARES Act because of the response from the federal government. So Oregon received 2 different waves of ESG CV dollars. The first is a $6.7 million wave of Emergency Solutions Grant dollars. Those dollars are really designed to support the infrastructure, the shelter, and the services for providing opportunities for people who are experiencing homelessness to move out of homelessness and to stay safe while they're experiencing homelessness, whether through shelter or through rapid rehousing, homelessness prevention, and even street outreach services. That $6.7 million is already out into the streets for community action agencies to provide those services. So we're expecting that to be a critical resource for us moving into the winter. The ESG CV2 wave was a large allotment. Really, HUD used a calculation that factored in the severity of our housing crisis, the severity of our homelessness crisis in the state of Oregon, and we received a $49.4 million allocation for that. You may know, as we discuss, we'll discuss this in the future November's meeting more, but so I won't go into too much detail now. But we are going to be bifurcating that. 42.4 million of that will be going out for a competitive process through an RFA that the Homeless Services section is currently creating. We expect that will be out in November, where implementation will happen hopefully in January. So more to come on that conversation. We're really excited to prioritize our culturally specific organizations across the state and ensuring that there's adequate collaboration and partnerships for those organizations. Additionally, the $7 million of the ESG Wave 2 will be going out to the community action agencies to ensure that they have the adequate resources to respond to the need now. We're hoping to get that funding from HUD here in the next few weeks. We're about to submit what's called a substantial amendment to ensure that we have those processes in place. Lastly, I just want to mention that we also are allocating an EHA discretionary fund. So we're going to be allocating that out to the community action agencies to ensure that they have additional flexible state resources to respond to the need that's in front of us. With that, I'm going to pass it over to Mr. Kenny to talk through some of the additional resources and strategies that we have for engagement with community.
Thanks, Assistant Director Savara. Good morning, everyone. Executive Director Salazar, Chair Hall, and members of the council. My name is Sam Kenny, and I'm the Homeless Services Policy Analyst. Very pleased to be speaking with you all again. As my colleagues have discussed, OHCS high-level strategy and thinking around winter and severe sheltering, as well as some program-specific information and details. I'm going to briefly discuss some of our coordination with key stakeholders, as well as community engagement efforts over the next couple of weeks. Both of which are absolutely critical to meeting the existing and future sheltering needs. If it was not obvious before, it's exceedingly clear now that the continuum of services needed to fully support people experiencing homelessness, especially during a pandemic, is much broader than just OHCS. We know this, and we've been working to include more voices in that conversation. So in order to do this, to fully collaborate and communicate, OHCS staff are engaging in several forums. Our colleagues in public affairs have been facilitating the Homeless Services Task Force. This has been a platform for collaboration and information sharing for a wide range of stakeholders, really focused on local community and homeless service providers and hearing their feedback. The goal is to mitigate the impacts of the COVID-19 pandemic and then really recently has been focusing on gearing up and thinking about and troubleshooting winter shelter and severe shelter questions. Homeless services staff routinely participate in these webinars and interact with stakeholders and the partners on the calls. I know from our end, we gain a ton of valuable information about what is happening throughout the state, and then hopefully we are able to share some information as well with them. The goal is to continue with this forum, and we expect that winter and severe shelter topics will feature largely in the collective discussion moving forward. Furthermore, OHCS is hosting a webinar this coming Monday on October 12th to provide additional details on available OHCS resources, hopefully to a wide range of attendees. So as Assistant Director Savara and Lean discussed, this is one of the pieces of feedback we've heard from our community partners, is trying to be very clear and concise about what resources we have, what they can be used for, and to really make sure that all partners in the community are aware of these. Oregon Health Authority will be joining us in this conversation, recognizing the tight connection between shelter and health, especially during a pandemic. Additionally, community-based organizations, recognizing the critical insight that community knowledge and is needed to connect with all populations experiencing homelessness. And of course, our Community Action Agency and Continuum of Care partners as well. So the goal of this webinar is really to provide full sight to all partners about our available resources, how they can be used, as well as thinking about how we can bridge gaps in the service system, how we can approach these problems collectively. So we would of course welcome your attendance, and this information will be shared within the director's office, and I think it was just shared in the chat here as well. So lastly, I would just like to comment that this work is iterative, that non-congregate and safe social distancing shelter during a pandemic is really new for all of us, that the task force webinars and the homeless services webinars really provide a space for us to learn from one another, to share best practices, and to troubleshoot challenges. So we know that as we move towards the winter shelter season, that problems and challenges will continue to arise, but we're confident that we can continue to try to work through them together. So with that, I think we will close, but we're happy to address any questions you may have.
Council, questions on this presentation? Well, if there are none at this time, certainly this was, I'm sorry.
I'm sorry, I can't tell who can see what, so I just had my hand up.
Okay.
I do have a question about the shift to non-congregate shelter. Do we know how that impacts our current shelters, and are our current shelters going to be at risk for not being funded? I know this is a huge challenge and very complicated right now, especially with COVID. And the other question I had was just about timing of the RFA. I live in a different part of the world than probably a lot of you, and winter really is upon us, and we're having those discussions with our communities right now, have been having them for several months. So I would just encourage us to get that RFA out as quickly as possible, and just have a concern about that, the priority to non-congregate. I understand shifting that, but I don't know what that's going to mean for the other shelters.
Yeah, thank you for that question, Councilmember Higginbotham. That's such an important point. So a couple of quick things, and I will start by saying we do have some time focused at the next month's meeting to really dive into the ESG timeline and planning with that. And timeline and execution of that is kind of first and top of our mind with that. So we will be able to dive into those details. I think as part of the question with non-congregate, that's an important part. And I think what Mr. Kinney mentioned is really important, that it is going to be iterative. Part of us facilitating and convening this space to really focus on the dialogue around non-congregate is to, I think, dispel some of the myths out there. I think some folks think that there is just one version and one type of non-congregate. And I think that just isn't true, but I think we need to stop and pause and talk about like the mechanics of the how in that. I think that's particularly important because I think what we're hearing from communities is how do I actually do this? And we also want the state to be aware that if we do this, that means that I have to cut my shelter capacity to do that. And as you know, Councilmember Higginbotham, that's a hard place to be in. It's a hard place to be in when you already have very limited shelter capacity. And then now I have to cut my very limited beds in half or by fourth now. And that's a problem. And so I think what we want to do at the state is really convene at the state level, both OHA, OHCS dollars, brain power thinking to really understand kind of the things that are happening at the local level, but also just the mechanics of how, so we can raise that up at the state level. And it's going to be a long journey. And I think what we want to acknowledge is this is the new way of our shelter system. The congregate way, we're simply not going back to that. And so we have to sort of acknowledge that, know that, and then figure out what the path forward is and allow for room for continued process improvement. I think that's where the piece is going to be. So I acknowledge that, and I appreciate those considerations and questions.
If I may just piggyback on that to the timing portion of Councilmember Higginbotham's question. So the dollars that are going directly out from ESG to community action agencies, as well as what we have called before the discretionary EHA, which is really being geared toward winter shelters, those funds will be out before that ESG 42 million competitive pot. So I don't want to put a date in the mouths of the staff here who are working on this, but that is being expressed, put out through our existing grant agreement. So just to make that crystal clear.
Thank you.
Chair Hall?
Do we have any? Yes, please.
Councilmember Lee.
Okay, the floor is yours.
Thank you. I just, again, want to thank staff for the presentation and for the thoughtfulness, and to offer that there is a lot of learning in our local area that has happened from going through this exact process of reducing our shelter beds by 50%, moving into congregate settings for that, and then moving out of those congregate settings into non-congregate settings. And we are, as Councilmember Higginbotham said before, we're each in very unique places with unique challenges and opportunities, so we can't extrapolate so easily. But I do believe there's some learnings there, and would just really offer any connections that you all haven't yet made, I know you have them, to that, because the learnings have been swift and I think helpful in that way, and maybe to assuage concerns. We are neither all one or all the other. Right? It's not 100% congregate, 100% non-congregate. I think the pathway forward is going to be a mix, both now and into the future. And if we can have that mindset that says, let's test it here, the mix and the balance of that is going to look different, I think, community by community. So I support the openness for innovation, and I support the testing, and I support this mindset that says we're probably going to be in a mix. And the question is, what's the right balance for the specific community in which we are doing our work? And we don't know that yet, but we're going to figure it out. So I just support all of that and offer anything we can in terms of the learning that we've had here locally.
Thank you, Councilmember Lee. Any staff feedback on the councilor's comments right now?
I'll just add, really, Councilmember Lee, really appreciate those comments, and definitely have been enjoying those collaborations with local communities, especially folks on the homeless populations task force. One thing I wanted to add around ingenuity is that we are seeing different models pop up around how to do this. So a great example recently was we were working with some subrecipients out of Hood River and Wasco County. We're working on a great project that utilized pallet shelters, essentially temporary structures that you can sort of purchase from a manufacturer, set up in about an hour. And originally the ESG CV HUD regulations didn't allow for purchasing those types of structures. It simply wasn't an allowable cost. We sort of went and talked with HUD and our partners at Housing and Urban Development, really saw the need and saw the unique needs for especially rural communities around something like that, a model like that, and they approved using those federal funds for a model like that, which is just a great example of ingenuity and creativity, as well as partnering with different diverse needs across the state.
Okay, thanks very much, Mike. Any other council feedback right now? And as always, and especially for our new members, you know, I just want to remind you all that if you think of, if we get to the close of the meeting and you're thinking, well, I wish I had asked that, I wish I had checked with that, checked in on that point, that staff is always, in my experience, very available and responsive for follow-up calls or emails. So last call on this topic, I think, before we would move on to our Oregon IDA discussion. Okay, let's move to that. And thank you, Mike. And thanks everybody who was part of this item.
Thank you, Chair Hall. Moving right along, I know that we have some vibrant discussion and we have some guests participating with us for discussion on the individual development account. And so with that, I will turn it right over to Jacqueline Boudreau to lead us through our discussion with IDA.
Good morning, Chair Hall, Director Salazar, and council members. Thank you for allowing me to speak with you this morning. Every year, council members receive an update on Oregon IDA. IDA has proven to be highly effective in building resiliency to navigate hard economic times, such as we find ourselves in today. If I could plant just this seed for you, that IDA could be one of the solutions as state government and community leaders develop Oregon's economic recovery plan. This year, we do have a wonderful program for you, which will be presented by staff of Neighborhood Partnerships and a special guest, Aldo Medina. And after a brief overview of IDA for the benefit of new council members, there will be a slide presentation on the latest impact and evaluation report, which is entitled appropriately Building Economic Resiliency. Following that will be Aldo Medina's presentation. And we will have time for questions. I know we're running long, but settle in. This will be a nice presentation for you, and hopefully we'll have some good questions regarding the IDA program. And you will, in a program update, receive more context, more information that you've already seen briefed in the memo, which starts in your packet on page 32. With that, please join me in welcoming Neighborhood Partnerships Holly McGuire. She is the IDA Program Manager.
Thank you, Jacqueline. I'm going to just start out by letting everybody know that I do have a teenager at home, and she is on alert to try to find another time to check in with me, but I can't make promises. So if I dash out, that's what's going on. As Jacqueline noted, I'm Holly McGuire, pronouns she, her, IDA Program Manager at Neighborhood Partnerships. This is my first opportunity to present at the council, and I really appreciate the time to share about the powerful work the initiative has been doing for the last couple of quarters since I think people were last here. I know some of you are probably more familiar with IDAs than others, so I'm going to provide some context for the rest of what you'll hear from our team today. IDAs, or individual development accounts, are matched savings accounts. Matched savings boost the power of a participant's own income and savings by matching each dollar they save anywhere from 1 to 1 to 1 to 5. Most savers in the Oregon IDA initiative are being matched either $3 for each dollar they save or $5. At 5 to 1, if I save $50 a month for a year, or $600, I will be matched $3,000 for a total of $3,600 toward my asset goal. Amy will be talking to you a little more about who our savers are, but I wanted to give a brief overview of what they save for. Carlos, I was wondering if you could pull up that, if you can share something with you all. Homeownership remains the goal that most of our savers enroll for, with a little over a third of our enrollments. Education and microenterprise are the next most common asset goals. Over the past 5 years or so, we have successfully folded in new asset categories to support savers on their path to greater financial stability. The most significant is vehicle purchase, and folks can also save for home renovation, rental, retirement, and assistive technology. Assistive technology allows savers with disabilities to purchase or modify equipment to support employment goals, and also allows savers to access other training and supports for gaining employment. Most recently, which I'll circle back to a little later, we are excited to be able to offer emergency savings as an asset category. The initiative offers IDAs through community-based direct service providers statewide. Neighborhood Partnerships, as contract administrator for the initiative, grants out to 10 fiduciary organizations, which we call FOs, because no one wants to say fiduciary over and over. 8 of our partners, thank you, Carlos, are single site, working in identified service areas or communities. We have 2 culturally specific providers who focus on serving the needs of Native American communities. That's Native American Youth and Family Services in the Portland Metro and Warm Springs Community Action Team on the Warm Springs Reservation. Both offer access to most assets. The Immigrant and Refugee Community Organization, or IRCO, and Micro Enterprise Services of Oregon, or MISO, also provide culturally specific programming. MISO solely in the micro enterprise space, and IRCO for micro enterprise and education IDAs. Mercy Corps Northwest also provides primarily micro enterprise, though for a subset of savers in or coming out of incarceration and folks working to regain housing, they offer education and rental, IDAs as well. College Dreams, which is, I think today, officially renamed Project Youth Plus, was formerly only education, but has expanded to offer vehicle and emergency savings in Southern Oregon. Dev Northwest offers most assets in the Central Corridor and Mid-Valley, and Portland Housing Center, of course, provides homeownership IDAs in the Portland Metro. 2 of our FOs are networks. Network FOs work with providers across the state, providing program structure, technical assistance, and fiscal management support for what is a relatively complex program. This relieves direct service providers of administrative burden and also allows some very small community organizations to offer this resource. Neighborhood Works Umpqua is both a direct service provider for most assets and provides support to a network of 10 organizations in Central and Southern Oregon. CASA of Oregon has 3 networks, and VITA Network offers most assets, My College Savings, and E3, both of which are education providers, for a network of about 55 provider organizations statewide. FOs and their partner providers work with interested participants in their geographic and cultural communities to determine eligibility, draft a personal development plan, and get started on a savings goal. Savers receive financial education and coaching and do asset-specific learning to support the long-term viability of their asset purchase. When savers reach their savings goal, the FOs disperse the match savers earned to complete the asset purchase. And if Carlos will move to the top of that page, there's just a few statistics there about the program. We have between probably 3,000 and 35 active savers at any one time, most of whom are living on low or very low incomes. I'm going to turn the screen over to Amy Stuchinski now, Neighborhood Partnerships Data and Evaluation Manager, who will share some of what we know about the impact of IDAs.
Good morning, members of the council. I'm Amy Stuchinski, and I'm the manager of data analysis and evaluation at Neighborhood Partnerships. I'd like to provide you with a brief overview of our evaluation process and findings. Okay. So Neighborhood Partnerships has been managing an internal evaluation process since 2015. Our evaluation design is built on input from stakeholders, including program participants and program providers. And the primary purposes of the evaluation are to understand who is being served and the extent to which IDA participants are achieving intended outcomes in terms of their financial stability and asset ownership. The evaluation uses data from multiple sources. We have a common client management system. We administer participant feedback surveys at the time of program exit, and again 1 year later, and some other sources are listed here on the slide. Sorry, there we go. So we use publicly available data sets such as the National Student Clearinghouse, and we interview clients and staff. Our findings suggest that IDAs provide a boost to Oregonians with low incomes as they work to stabilize their financial lives. IDAs can support people with the tools to rebuild after the economic consequences of COVID. And your memo attachments had some demographic data from last year. Today, I'll be providing findings from our most recent report, which will be released later this month. As Holly mentioned, the initiative has a network of culturally specific and culturally responsive providers. There we go. That can deliver needed economic opportunities to build wealth among Oregon's communities of color. and contribute to a more just future for all of Oregon. More than half of our savers are from communities of color, and IDAs, I'm sorry, my screen seems to be a little bit delayed there, but I'll just continue. So more than half of savers are from communities of color, and IDAs reach people of color at rates that are equal to or greater than their proportion of all Oregonians with low incomes, as measured by official data sources, which will be necessary to address racial wealth disparities in our state. So for example, this graph shows that 12% of IDAs in the last 2 years went to savers who are Black or African American, illustrating the capacity of IDAs to reach savers in the Black community, who comprise 4% of Oregonians with low incomes. The initiative's network of providers reaches urban and rural communities. In the last 33 years, IDAs have been opened in 32 out of 36 counties. And as they plan for their asset goals, savers access individualized coaching, which the vast majority of savers rate as significantly helpful to them. Savers point to experiences with improved service integration, increased connections to banks, credit unions, and other financial products and services, and increased confidence and sense of control. IDA savers demonstrate improved financial capability. Financial capability is the capacity based on knowledge, skills, and access to manage financial resources effectively. Both our stakeholders and independent research suggest the importance of financial capability as being a necessary component for a household's financial health and leading to increased resilience in tough economic times. The evaluation finds that there are significant increases in the percentage of participants who practice financial habits that are considered components of financial capability, such as using automatic deposit for saving or balancing their expenses with their income. And when measured a year or more after exiting the IDA program, savers' practice of these components of financial capability still exceed national rates. And my computer is not being responsive to show you that data. I'll see if I can pull it up here while I continue. With the increased financial tools and resources, IDA savers' assets bring a home to depend on, create jobs, and increase earned income, leading to inclusive growth and economic returns for Oregon's communities. IDA homebuyers are making all their mortgage payments in the year after purchase. IDA-supported microenterprises continue to operate and build their stability, and education savers go on to finish their degrees and continue their post-secondary enrollment, leading to new jobs in their fields of study. So the data that I've been sharing is available on our website as an evaluation 2-pager. It's up there now, and our full report will be posted there in mid-October, and that's at OregonIDAinitiative.org. And you'll hear from Holly in a moment about some of the ways that we're using this data in program development and design. But to conclude, I'd like to say, we know that in Oregon, we need to reform the systems that enrich and empower the wealthy and well-connected at the expense of people of color and people with limited income and wealth. When financial challenges and economic shocks arise, assets provide a foundation of resources that can be drawn upon. Our data suggests that IDAs can be a powerful tool to address racial wealth disparities and create an Oregon where all benefit from inclusive economic growth. However, there have not been enough IDAs available to meet the need. With significantly more investment in asset building tools like IDAs, Oregon would see more widespread community level change. I'd now like to introduce one of our IDA savers, Aldo Medina.
Thank you, Amy. Hi, members of the council. I'm a little shy and I'm gonna read through my screen. So I'm gonna turn the camera off as I read my story. But my name, thank you, Amy, and members of the council, thank you for having me today. My name is Aldo Medina Martinez, and I'm a proud homeowner of a ranch-style home in East Portland on 148th and Powell near Powell Butte. I'd like to share with you today my story, and here's how and how I got here. As an immigrant from the state of Morelos in southern Mexico, I'm an immigrant from the state of Morelos in southern Mexico. Mexico. My family and I came to this country when I was 2 years old, seeking better opportunities. My entire life, my parents worked really hard to provide us with a roof over our heads, and I'm forever grateful to them. When we got to the US, we lived in a 1-bedroom apartment with 3 other families. And as a kid, it all felt normal. As I grew older, we moved into a small 2-bedroom home, and that's where I grew up. All my life, my family and I were renters, and saving up for a down payment for a home seemed like a faraway dream. At that point, we were just trying to survive. I moved to Oregon almost 3 years ago, and I was amazed that there was such a program as the Individual Development Account. When I heard about the program, I was shocked, but excited to knock on as many doors as possible to get more information, and fortunately received an IDA from Hacienda CDC in Northeast Portland. The program was important in that it paired me with a housing counselor, and it was going to be the biggest purchase of my life. So I knew I was going to ask a lot of questions, and I wanted to make sure I did it well. The structure of the program allowed me to be accountable to myself, having my financial coach at Hacienda walk me through the steps and being there for any questions I had. The first-time homebuyer course that I took through the Portland Housing Center was crucial in my understanding of a long and complex process and transaction. These requirements for the IDA, along with my savings plan agreement, where my financial coach and I worked on a plan to help me get purchase ready, were super important skills that I developed along the way. For the financial institution, I chose the bank up the street from my old rental apartment and would go every month to deposit my IDA money, making it a point to walk into the bank every month and physically deposit my money. This was crucial as I developed the habit to save on a consistent basis, and the 3-to-1 incentive was just a cherry on top. I had a plan to purchase a home within 3 years from the start of the program, and I was working on my credit and paying down my debt. My financial coach informed me about another potential opportunity for additional down payment assistance through the LIFT Fund. That was really the turning point in my home purchase journey. I waited in line at 5 in the morning on a Saturday morning last fall at the convention center for just an opportunity to win $20,000 towards the down payment of a home. It was a really long day, but at the end, I walked out of there with a voucher for $20,000. That grant, coupled with my IDA, allowed me the confidence to take the chance and start shopping for a home. The IDA was a key financial instrument in the purchase of my home. Not only was the money important, but all of the resources and support that came with it were crucial. I never felt alone, and honestly, it was a scary process, but I'm so glad I did it. This is the type of program that we need more than ever. In order to address the racial wealth gap, we need programs like this in order for immigrants like myself to purchase assets and begin the process of generational wealth. I always tell people about the program, and I'm so grateful for all the people along the way. I want to thank Carlos and the team at Neighborhood Partnerships for making these programs possible and continue to support Oregonians throughout the state. Thank you for your time, and I hope you all have a wonderful Friday. Muchas gracias.
Good morning. Buenos dias, council members, and welcome to the new council members. It's good to be with you all in this virtual space. My name is Carlos Garcia, and I'm honored to serve as the new Executive Director of Neighborhood Partnerships. I've been on the job a full 3 weeks now, and although I'm in a new position, I'm not new to IDAs. I'm a past saver. I worked previously at Hacienda for several years, offering IDAs and coaching support to savers to reach their homeownership goals. And over the last 2 years, I had been leading the team at MP that oversaw the program for the state of Oregon. So I've had firsthand experience about the power that this strategy has had in my own life and in the lives of so many in our community. It's been my experience that the power and impact of this amazing program comes from the trusted relationship that our community partners have with their community members. And additionally, that the investment that the state has made to provide stable and secure funding has supported the types of relationships needed to help meet savers where they're at over the course of their savings goal. This stable funding has been key. Unfortunately, due to changes at the federal level, the initiative is facing some significant funding shortfalls. I'd like to provide you with some context on our funding and provide some updates for the initiative since we last presented to the council. Since its inception in 1999, the Oregon IDA initiative has been funded by a state income tax credit. Since that time, the tax credit mechanism allowed us to leverage state resources effectively, with a high of in 2018 when we sold $7.5 million of tax credits for $10.8 million for the initiative. At the end of 2017, the Federal Tax Cut and Jobs Act limited state and local deductions. Several states issued new tax credits, and in reaction, the IRS regulation was issued, which stated that money received in return for state tax credits could not be deducted as a charitable contribution on federal taxes. That rule made the Oregon IDA initiative tax credit a dramatically less viable funding mechanism to achieve our state goals. In 2019, we were able to sell we weren't able to sell our full allocation of state tax credits because of the unmarketability of the tax credit. We ended the year with $2.1 million in unsold tax credits in spite of aggressive marketing. I want to acknowledge that this is somewhat wonky tax stuff, but the general takeaway from this is that tax credits, like the ones that have funded the IDA initiative, have lost a lot of value. And because of that, it's just not having the same impact that donors want to see in reducing their tax obligation, which ultimately means less funding for the initiative and for savers like Aldo. Our experience in 2019 led us to believe that the credit was not a viable option. We saw two paths forward to move the initiative, to continue helping support the initiative doing this important work. We could make changes to the tax credit to make it more marketable and or convert to a different source of funding, which is general fund. In early 2020, in consultation with our partners across the state and with OHCS, we decided on the second path. In 2020 short session, we had all of our legislative requests in place, including sunsetting the tax credit, converting the unsold tax credits from tax credit to general fund, as well as a one-time general fund request that would have made up our gap in funding. Additionally, we had some statutory changes included that supported the success of our savers, and we were contemplated for an additional $2 million by the Joint Task Force on Addressing Racial Disparities as a tool to help address the racial homeownership gap. Unfortunately, the 2020 short session ended before these could get passed. Along with our partners, we continued to advocate for the IDA program, and in the first special session in June, we're able to get emergency savings passed, which Holly will talk about here in a little bit. Additionally, in the second special session in August, we were able to secure $2 million in general fund to support the initiative. Part of our role as the contract administrator for the IDA initiative is to grant out dollars to our partners. Given all of the uncertainty with funding, we developed an interim funding model with a goal of supporting our FOs and our current savers. We established a set of priorities in conversations with Oregon Housing and Community Services. Without getting too far into the weeds, we used existing resources that we had available and made projections for possible funds to come online. We established a baseline funding model for the FOs based on recent grants and allocations to savers. Our key priority, given the uncertainty, was to support our partners and their partner organizations to maintain a level of stability to continue supporting existing savers. In March of 2020, we recommended our first interim funding package that covered program support, and match funds necessary to cover the first part of the contract year. And this week, we were able to recommend a second package after receiving the one-time $2 million general fund allocation from the second special session. For the remainder part of this year, one of our main priorities will also be to continue to aggressively market, sell, and raise as many tax credits as possible for the initiative. I want to send a special thanks to our IDA legislative work group, comprised from IDA partners from across the state who have been super supportive and very involved in our advocacy and legislative efforts to make the necessary changes to support the funding stability of our program for our savers. We have also been in working closely with OHCS staff, especially Jacqueline, and are in full support of OHCS's IDA legislative concept for 2021 for IDAs, which calls for $15 million in funding, some updated changes to statute, and converting the tax credit to general fund. Ultimately, our goal is to fully fund the initiative. We need to ensure that more Oregonians are accessing basic stability and hope for the future, for a better future through IDAs. That means stable funding for the initiative. We will continue to work with our partners, Oregon Housing and Community Services, and our partners in the legislature to advocate and secure the resources needed to keep this impactful program funded. We are hopeful and have been in conversation with the governor's office and hope that the IDA initiative will be included in the governor's budget heading into 2021. And lastly, I'm just excited that we've increased our legislative capacity to support this work, as we've hired Lauren Aldoza, our new legislative and communications manager, in August to help support and coordinate some of these efforts. Lauren is from Oregon and joins us after spending 2 years in DC working for Senator Merkley's office, and comes with a ton of experience and energy to support the IDA and our housing efforts. I'd like to now turn it over to my colleague Holly, back to Holly, to tell you a little bit more about our initiative's racial equity work and our response to COVID. Holly?
Thanks, Carlos. Yes, I'm going to give you guys an update on our racial equity work and finish off with some focus on the initiative response as the pandemic began and has now settled in for a much longer stay than most of us were expecting. As an organization, Neighborhood Partnerships continues to deepen and expand our equity work. We have published our equity statement and have a working equity plan that reaches into all elements of our internal and external work. We have created accountability structures with our equity team, allowing us to track where we are and are not meeting our goals. In part, we have learned that accountability is about transparency and about learning. We have learned from others' willingness to share their experiences in our journey and want to share from our own experiences in turn. As the IDA initiative is a large part of our work, our commitment to centering race and equity impacts our contract management and convening of the program. In the 2019 program year, we began our work with the FOs by requiring an equity goal in their annual work plans, which they reported on quarterly. We also created a couple of reports from our database that program staff could pull at will to start looking at the racial and ethnic demographics of their enrollments and completions being successful asset purchases. We worked together to test the assumption we had that enrollment rates would be higher for BIPOC savers than completion rates due to greater systemic and programmatic barriers. This did play out in the numbers. But we also heard a lot of uncertainty from FOs about what to do with the information, which was relatively raw, and how to understand what it meant. For the 2020 work plan, FOs updated their equity goals, and we are energized to see development and more engagement organizationally among the FO providers. Efforts include trainings, development of equity statements, policies reviewed for barriers, organizational level equity work, and development to better serve culturally specific communities. In response to the challenges FOs experienced and the feedback they provided in our initial rollout of demographic data to program staff, we did an internal exploration with evaluation staff support and our equity lens to think about how NP would be integrating existing demographic data into our next funding process. This allowed us to engage in a design process around what information would be useful for the FOs to access and understand, and how to contextualize and present the data in a meaningful format. We workshopped our ideas in several sessions with the FO body and are releasing our initial installment of benchmark data to the FOs next week. We have defined 5 geographic regions statewide and are reporting to each FO about their demographic outcomes in enrollments and successful asset purchases by region and racial demographic against census low-income baselines. We have created initiative level goals for outcomes, and the FOs will be considering how their programs are and could better support the initiative toward these goals. The benchmark goals will support us to identify gaps and opportunities for BIPOC savers and allow the initiative to develop a plan to bridge those gaps through development in existing partnerships and better on-ramps for new BIPOC organizations to provide this resource. The last equity note I will share is around initiative-wide learning. In March, NP had scheduled a 2-day training in conjunction with the Center for Equity and Inclusion and CASA of Oregon, open to all IDA provider organizations for free. It was scheduled for 2 weeks after the COVID shutdown. As we all regrouped, our planning team revisioned the training as a monthly series in short format sessions. Our launch was in August with a Trauma Informed Spaces workshop led by Trauma Informed Oregon. It was very well received. And our second installment was last week, focused on equity toolbox work from the Center for Equity and Inclusion, with a follow-up session scheduled next week. We have learning opportunities scheduled into November and anticipate making this a standing element of our contract administration for the initiative. COVID has obviously impacted all of our work and daily lives in pretty much every way. I have to raise up the incredible flexibility and grace demonstrated by our partner organizations as direct service went remote at the drop of a hat. There was almost no gap in service for clients for all of the critical supports and services these community organizations provide. Staff found ways to respond to critical needs, to bridge the gap when banking was more offline than providers were, and to convene to think creatively about what savers were bringing to the table. NP began hosting weekly calls with the FOs almost immediately to troubleshoot barriers that remote service was hitting and to workshop policy shifts. It allowed us and HCS to receive immediate feedback on what was impacting savers and providers. We rapidly implemented a short-term policy shift to avoid penalties for savers who missed deposits and to extend the amount of time to reach savings goals to address folks whose income was impacted by the pandemic response. In the first emergency session, we requested and received a statute change to allow the use of match for emergency savings. This has been an equity reach goal for NP for some time, as even before the pandemic, we know that our economy did not support families enough to save for an emergency. Data collected before the COVID-19 pandemic found that nearly 4 in 10 Oregon households did not have enough savings to survive financially for 3 months if they lost their jobs. Additionally, as a result of historic and systemic discrimination and economic opportunity, communities of color disproportionately experience this material hardship, where the rate in Oregon was nearly 6 in 10 households. The statute change allows an IDA saver to receive match to cover, and this is from statute, unexpected and substantial personal expenses that would significantly impact the account holder's non-cash assets, health, housing, or standard of living if not promptly addressed. NP has worked with the FO body to design a policy providing access to match for these purposes within the framework of their existing IDAs for other assets, fully implemented in August. While it does not feel like I can say we were happy that it was already in place when fires ravaged the state, we were grateful that partners had an immediate lifeline to offer folks who had lost so much so unexpectedly. Responding to the growing need for stability and the situation of reduced income for so many of our savers, NP has encouraged a shift, already available in statute, from a general use of a 3-to-1 match rate to 5-to-1 match rates for new enrollments. Most of our providers are moving in this direction. Finally and briefly, tremendous work has been done by a financial education work group, our IDA coordinator, Luke Bonham, and our consultant, Julie Wang, to run the IDA financial education standard through an equity lens, reviewing existing curricula initiative-wide, and completing a radically streamlined and saver-focused financial education standards 2.0, which is rolling out to providers this month. Working toward adherence to the standards has also been in FO work plans over the last 2 program years. As COVID asked all providers to pivot from in-person education, some savers were left with fewer opportunities to complete this requirement, or due to reduced bandwidth as providers worked to meet very basic needs of clients, savers were using less robust online options. One FO, Deaf Northwest, had already piloted live online financial education meeting initiative standards. They proposed to the initiative providers that their classes would be made available to savers initiative-wide, and we have been piloting that as a resource to great success. It's an exciting step into an even more collaborative model, which can only benefit providers in an increasingly resource-stretched environment. I'd like to thank everybody for listening to our presentation, and I think, I don't know if we have time for questions. I assume we do.
Thank you, Holly. Thank you to all the neighborhood partnerships team. And, you know, as you said, I know that there are varying levels of familiarity with the IDA program among the council. This is one that is very near and dear to my heart. It seems like not all that long ago, I completed 10 years of service on the Neighborhood Partnerships Board of Directors. And just again and again, hearing Aldo's success story this morning was so wonderful. But through the years, I remember hearing so many success stories in a similar vein. So I am just highly enthusiastic about this program. I don't have any comments or questions at this time, but if we do have opportunity for some immediate council feedback, I would like to open things up for that. And speak right up, anybody on the council who has.
This is Councilmember Sandoval.
The floor is yours.
Okay, thank you. So have you worked at all with the, well, first I should say I'm a big fan of the program. And I always enjoy listening to Amy's evaluations. They're wonderful. Have you worked with the Oregon, I guess it's Business Oregon, right? The Economic Development Agency of the state of Oregon, especially as it relates to, saving for starting small businesses. Have they shown any interest in this, or what's happening along those lines?
I believe we have had conversations with them in the past. I think a lot of the direct relationships happen with our local partners, so our IDA partners and our fiduciary organizations that are working to make those connections with the Oregon Business Council or other groups. But I can get back to you to make sure if we've had any specific conversations with them for the micro enterprise component of the IDA initiative.
Yeah, I was just thinking about, because they control the women and minority, certificate for contracting, and so I was wondering if if somehow you can create some synergy around that relationship.
I would jump in and just add that as you heard the conversation around the funding opportunities, we do have the proposal around IDA in our agency request budget, and I saw Councilmember Wilhoit's note about that. I think given the recovery work that will be going on from both major crises this year, there is definitely, I think, an opening and a responsibility for us to collaborate with economic development forces to make sure that we're being strategic about how to leverage this relatively small program with other economic development strategies. And so if Neighborhood Partnerships would like us to help broker those relationships, we can certainly do that.
Right.
Chair Hall, Councilmember Lee.
I'm sorry, I was muted. The floor is yours.
Thank you. Thanks, Neighborhood Partnerships team, for a beautiful presentation. I have a question and then a couple of reflections. First of all, just as curiosity, who buys the tax credits, and has that changed since some of the challenges that have been happening and the economy has changed? It's just a question for curiosity. I'm ignorant. And two is, I really want to lift up Councilmember Sandoval and Councilmember Wilhoit's discussion about how do we expand this. We've talked about this in the past, but I think it's even more important now. We invest a lot of resources in services, and services are life-saving and they are important. And sometimes people who are living in poverty don't need services, they need cash. They need access to cash in order to be self-determining what their pathway to stability is. And this program, I think, is wonderful, and I think it's doing the work that we need to do it, and it's such a small piece of how we think about our strategy for helping our neighbors and our community members live out of poverty, right? Come out of poverty in a structural way. I think about the conversation we had with the down payment assistance and the home ownership programs. I mean, what if there was a more clear link to the IDA, right? So where we're layering, we've talked about this before. How do we layer access, not through happenstance, because somebody told me about it, I happened to go to the right place and I got in the door of 3 different programs, but how do we make sure, and I think Aldo story about what happened for him about learning about Lyft is a really great example of that was a wonderful serendipitous occurrence, but the system is not set up to make sure that every time someone gets to know about those programs and someone gets to know about these programs. And I feel like we've got to challenge our thinking and our paradigm of what is the best help, quote unquote, that we should be offering to people living in poverty, and what that means to the narrative of who we think is in poverty and why they're in poverty, right? When we think in certain ways, services feel like the most important thing, the case management, the navigation, those kinds of things. When we think in other ways, more structural ways, access to cash, access to resources, access to the ability to build assets both for the current generation and for generations to come are much more effective and impactful. And I think now, you know, we're challenging lots of things, right? That we are all used to doing. And now we've got to really, I think, challenge ourselves even more to think differently. And it's an opportunity right now because a lot of the things that we knew had to be in place are different now. So I just want to raise up this issue of expanding this practice, not the IDA program necessarily in and itself, but this practice of helping people build cash assets and wealth across programs, and then the layering of our very programs so that people get the maximum impact and access to the assistance that we have that we can possibly offer them every single time in a structural manner, not in a happenstance or serendipitous manner.
Thank you for the question and comment, Councilmember Lee. I think to answer your quick question about who's buying the tax credit. So again, the program is funded through a state tax credit and really has benefited in the past, has benefited those with a tax liability, the Oregon state tax liability, right? So they use the tax credit to offset that tax liability, which normally means it's been wealthy individuals. Because of the changes at the federal tax level that limited the amount that folks could use to be able to offset those tax liabilities. Again, it used to be that folks used to be able to take advantage of both the tax credit and also gain the charitable deduction to be able to reduce their tax credits. And that's what's changed and has made it way less desirable for donors to be able to take advantage of the tax credit. So that's why we've been having issues with selling and marketing the tax credit. And then in terms of your other comment, just in general about the nature of cash and the way that the resource, I mean, I've heard count through my experience working with savers. And that's the one thing that continually comes up is that part of what makes this program successful is that folks are getting the money and the cash that they need to do the thing that they want to do, right? And you know, coupled with the coaching and the support that they're getting, that's obviously part of what makes the program so successful. And you know, through the years, the program has been trying to make shifts in that direction to make it more, to reduce the barriers and make accessible more options for people to be able to use the funding in the way that they see best fit to be able to do that. So thank you for that comment.
If I could just briefly also, I really want to, the layering is super important. And I think that many people, especially on homeownership, it's critical. There's just not enough resources. But I would echo what one of the earlier speakers, Tim Su from California, said, is that program stability over time is absolutely critical to that model. You know, one of the biggest blows that we experience all of the time is turnover at the staff level in programs. And when staff turnover, their understanding of all of these complicated programs disappears with them. Somebody new comes in, all of the bandwidth goes to just getting them operational again. And this is true across the network. And it's one of the reasons that we really prioritize program stability. because as soon as you disrupt a program, rebuilding that base of support for the community and rebuilding the depth of knowledge that longer term staff have about all of the layers that are available to people, when they're really able to curate for people to say, these are resources that are available, this is how you get them. We have not, you know, as administrators, as the state, been able to get it to be that there are no barriers, but if people are available who know how to get you past those barriers, it's a huge help. And I think both of the things need to be prioritized, getting rid of a lot of these barriers, but also making sure that the really skilled staff who understand how to navigate them maintain support for these programs, because otherwise it just all crashes.
All right. Thank you all very much, and for a very, really an outstanding presentation, outstanding council discussion. And I'm going to ask at this point, staff, that since this was a report, no action item, what our next steps are going to be, whether it's just going to be further reporting to the council, or where do we head from here?
I'll just add, we will continue to update the council on this program. I think the next big piece in front of us is the agency budget process, and working with the governor's office and the Department of Administrative Services to nail down the governor's recommended budget for the 2021-2023 biennium. And I think that's the next stage, is really looking at that continuity of program funding, taking to heart the comments today about how we can align with other structural programs to make this program as effective as possible. And just to make very clear, this will be a general fund ask, so it will require a rethink of the program, because that's not how it is currently administered. So from the agency's perspective, it's a little different. So I think there's just dialogue, and if council members are interested in plugging into that dialogue, just shoot me a note, and we'd be glad to engage you in that.
All righty. Thank you, Director Salazar. And again, thank you to the Neighborhood Partnerships team. And Carlos, I don't think I've had an opportunity in person yet to say this, but congratulations on a very well-deserved promotion. I know you're stepping into some very big shoes in replacing Janet Bird, who retired, but I know you will be up to the task. So again, thanks. And now we are at the point where we move on to the director's report.
Absolutely.
Director Salazar.
Yes, and thank you so much to our guests for the last presentation. And I'm just acknowledging that we're over time, largely due to our technical glitch. So I know council members were imposing on you, but I do have very important updates from the wildfires. So if you can just indulge me for about 10 minutes, I want to make sure to give you some important information. So obviously the world has completely changed since our last council meeting. This has certainly been a wild year. So first and foremost, as we've already shared, our hearts go out to all the individuals and families living in the fire impacted areas. Thousands of Oregonians in the blink of an eye had their worlds turned upside down. And for some of you on council, as we've already mentioned, this hits particularly home. The state has lost approximately 4,000 homes, with more than half of those homes in Jackson County. Damage assessments are still being finalized by FEMA and county administrators, so those numbers will update accordingly. Our staff are working closely with the Office of Emergency Management and the Department of Human Services and the Red Cross on shelter plans. So one thing I wanted to make sure to clarify and make really clear from the outset for the council is that Oregon Housing Community Services Department's primary role is as a recovery agency. So our primary focus is on that, all the conversation we're having around building back, which is, the 1 to 5 year process of really helping to steer the ship in that direction. But in this response phase, we are also playing a support function with the state's emergency command center and what's called the Emergency Support Function 6, or ESF 6, which is all around mass care, sheltering, food, water. So we're working with OEM, the Office of Emergency Management, the Department of Human Services, and the Red Cross on shelter plans. And I think you heard the conversation earlier. We know that there is not enough shelter generally for the state, but there's the specific sheltering mission, which is really for folks that are displaced due to the wildfire. So there's a couple different kinds of sheltering layers that we're talking about. As of yesterday, the Red Cross had served more than 2,400 people and served more than 135,000 meals. A lot of those people are in non-congregate shelters, so motel settings. Some are in congregate settings, some are living in vehicles. So we have a range of things that are happening out there. We all know that Oregon had a housing crisis before the wildfires, and vacancy rates are between 2 and 3%. And our good friends at FEMA, many of whom are coming from out of state to assist, are really learning very quickly that we have limited and in some cases no vacancies available for temporary housing options for people who are displaced. So the massive loss of housing caused by the wildfires, of course, has only exacerbated this crisis. We learned yesterday that Oregon was not initially approved by FEMA for what's called a housing mission. And just to be clear, we have this sheltering mission that the Red Cross is providing, which is really that short-term immediate mission. That can sustain for a while, and DHS is currently negotiating the length of that, whether that will be through November or December to include those contracts, for example, with motels. But in order to get what are affectionately known as FEMA trailers or other kinds of solutions with federal dollars requires FEMA to agree to do what's called a housing mission. So right now they don't have enough data to support that. We are working with the Oregon Office of Emergency Management to make a request to FEMA directly to engage in a housing mission, because we think this will be critical in this interim phase, which happens to coincide with the winter season, which we already know we have this sheltering crunch in the inclement weather season. And to Councilmember Higginbotham's questions earlier, it's going to be even more exacerbated as we try to look at non-congregate sheltering. So we think it's critical to have that housing mission in these impacted counties. So we're making that request now. We will be sharing that request with our congressional delegation. I encourage you to help us amplify that request to get that attention for that FEMA mission. Receiving a housing mission could bring manufactured homes into the state and additional resources for displaced Oregonians. We have already engaged our federal delegation, but we encourage you to help us amplify that. And we will provide you some additional information once we get that request completed today. The big recovery push at the moment is to ensure that all of those that can receive FEMA individual assistance apply for it by November 14th. As of yesterday, FEMA received more than 6,600 applications for individual assistance, totaling about $14.1 million. But not all of our friends and neighbors have access to FEMA. Those without documentation are ineligible, and FEMA does not have a policy in place to protect the information of mixed status families. So we've not been able to get a clear guarantee that if mixed status families come and register for FEMA assistance, that their information won't be shared. We know that that causes a real justified fear amongst our Latinx population. And so we're going to have to work front and center. We're working with local partners on the ground to help do outreach. What's challenging is that a lot of these decisions by the feds will be driven by the number of people who register for that assistance. And so it's really tough right now because we know that there are flaws in the system, but we also know that we have to do everything we can to amplify the message to get people who could potentially receive benefits to register and request them. So again, the more you can help us amplify that, the better. The governor's office is prioritizing this work at the state level. They're working with some culturally specific providers and community-based organizations, sending staff out to these zones, but this is going to be a tough road. You may have seen the news on last Friday, a week ago, and what a week it's been, that we unexpectedly received $10 million from the legislature to add to the wildfire damage housing relief program. So this is an existing program. You have not heard much about it because it has not been an active program. We've had very modest funds in the program in the past. It is a specific program that currently is structured to provide $7,000 in direct benefits for individuals whose homes are impacted by wildfires. One thing I just need to make crystal clear, and I'll be continuing to clarify this with legislators, is that due to FEMA duplication of benefits requirements, the funds should not be distributed until a household receives those FEMA dollars. And that's because FEMA assistance is up to about $35,000 per household. This is only $7,000. And if we provide the $7,000 first, that household may then become ineligible for those $35,000. And so we're trying to protect that process, which is FEMA insurance if people have it, home insurance, and then these state benefits that could come on top of that. It's challenging. The legislature really wants to see results quickly, and we're trying to manage expectations about what we might be able to do to get some dollars out quickly to folks that might not be FEMA eligible or might not have insurance, and therefore could kind of help to fill that gap that we just talked about, but also not trip up people that could benefit from those federal dollars. So we'll be sharing you more information on that soon as we stand up yet another brand new program this year. As we look ahead to recovery, we are utilizing our role as a convener and leading the Oregon Disaster Housing Task Force. So under the state's recovery framework, that is our responsibility. I want to thank Kenny LaPointe and call him out by name because he's just been doing incredible work to lead this effort and to coordinate this. And the whole public affairs team has joined him in that. The task force has met twice in the last 3 weeks. We just had a meeting yesterday in response to the wildfires and in preparation for the recovery efforts. The task force includes a number of additional state agencies so that we're having an interagency conversation. And we also have a number of key stakeholders and local leaders at the table as well. It's being coordinated with other task forces that are coming together at the state level. There's a debris task force, debris removal task force. There's also a new economic recovery council that the governor announced earlier this week. And so our role will be focusing again on that longer term recovery. We had a presentation yesterday that was wonderful from our friends at the HUD field office who really laid out the existing HUD programs that could be used to assist in this effort, acknowledging that these are existing programs and it would require some rethinking. We're of course starting the conversations about rethinking how to use existing resources, both state and federal, but we have to have our eye on that FEMA assistance so that we're not tripping that up. But I want to make very clear to you that that's small potatoes compared to what we need to be doing, which is really launching a full court press to advocate for a disaster supplemental in Congress that would provide CDBG disaster recovery dollars. In talking to our friends in California, we've been talking to them about so many things. One of the things that we've heard is that after the Napa and Sonoma fires in 2017, they received about $150 million in CDBG DR resources. And after that devastating Paradise fire that you may recall in 2018, they received $1 billion. So this is the big money, just to be clear, that we need to keep our eye on. So as we're doing all this work here, we need to continue to have those dialogues around pressing FEMA for what we need in terms of a housing mission for that intermediate work, and then looking at the long view around the rebuilding and the decisions that will have to be made around not only where to rebuild, as we heard earlier, but what to rebuild will be really important. And so we're trying to coordinate with local economic recovery councils, regional solutions, and so many other partners as well. So I anticipate that we'll continue to brief you on wildfire recovery. We'll continue to come to you, those of you that are in the fire impacted areas, including Chair Hall, Council Members Farrell, DeFontorum, and Jameson. We anticipate that we'll continue to come to you for your insight on what's going on the ground and how we can involve you. One final thing I wanted to share today is around legislative activity. And I'll just share that, as you all know, we had a legislative days last week, which is how we were pleased to see our new council members confirmed. We did testify in the legislature in a number of hearings. I think folks were pleased to hear what we're working on. There is keen legislative interest in the spend down of the coronavirus relief funds. You may recall that these were funds that were allocated to the agency as part of the Federal CARES Act. The lion's share of these dollars were put out to community action agencies who are working just heroically to get these dollars out for energy assistance and rental assistance. The legislature is keenly interested in tracking the spend down of those dollars. They have to be spent by December 30th. And we've been asked to generate reports for the legislature and for the governor tracking that spend down. So there will be a report that we're putting out today that identifies that, and we've been able to include in that information where the community action agencies have committed funds to households in advance, even if the funds haven't actually been expended yet. So it's a little bit more of an accurate picture of what's going on the ground. We expect this to continue to be of great interest to the legislature. We're hearing talk that there may, and then of course we had the e-board, the emergency board meeting on Friday where we received that generous $10 million allocation. We're hearing talk that there may be another emergency board meeting in October, again, to respond to the wildfire needs. And so we are working to identify gaps, some of which I just shared with you in the existing structures and dollars available and making sure our voice is in those conversations. And then we believe that there may be yet another special session coming, potentially in November, where if we need to make program changes to things like the wildfire housing relief program or other programs to make them work better for folks on the ground, that we could pursue that. And then the final thing I wanted to share with you, and I mentioned a bit earlier, is that we are heading into the budget appeal season with the governor. And you may have heard that the revenue forecast, which also came out, I think last week, was better than state leaders had anticipated, which was very welcome news. Of course, we still have a state budget crisis because of the COVID crisis, but it is a little better than folks had expected. And so as we go into this budget process, yet again, after the wildfires, we've had to rethink our budget submission and all the assumptions we put into it. And so this is all moving very quickly. And we expect to be in those appeal conversations with the governor's office later this month. And then the governor's budget is due out in December. So that's what's happening at the agency, just a slice of what's happening. And I'd be happy to take any of your questions.
Council members, any questions for Director Salazar on her report? Going once, going twice. You know, I've got to say this has been a very information-packed meeting. Great discussion, and maybe everybody's kind of hitting that noon hour wall. But I will say thank you then to Director Salazar. And our final agenda item is the chair's report. And again, I want to be respectful of everybody's time, but I have been thinking and jotting down some notes, and just would like to follow up the director's report with some of my own reflections on this fire disaster. And I know it tears at my heart, it tears at all of our hearts to see so many homes lost and so many lives thrown into upheaval. We all know, I'm preaching to the choir, housing matters, and housing matters deeply. Not just for people's security, health, and stability, though those are really important, but how we all know that a home is really a place of comfort, a place of refuge for individuals and families. And yes, some places got hit even more severely than Lincoln County did, but I'm just thinking about this. We've got here roughly 1% of the state's population, yet 7.3%, if my numbers are right, 7.3% of all the housing stock destroyed by fire, roughly 300 of the 4,000 units were right here in Lincoln County. Through the years, I have worn many hats in the housing realm, as I know we all have, a volunteer, an advocate, a local elected official, and for the last couple of years, a member of this council. And I am so proud to be part of this group. I am so proud of the progress that we of Oregonians have made in this vital realm in the last few years. You know, we start off, I think, by thanking hundreds, if not thousands of advocates from every part of the state in really continuing to diligently, even relentlessly push this issue to the top of the agenda. And we've been heard. We've been heard by the legislature. We've been heard by the governor. We have been heard by OHCS. And, you know, now we have achieved results that I think most people would have thought wouldn't have been possible even a few years ago. It took vision and it took boldness. And now I want to make a plea to everybody hearing my voice right now, not just my fellow council members, not just agency staff, but anybody who might be listening into this meeting to even move that, to see if we can really move to the next level of imagination and boldness. You know, working in local government for as long as I have, I know that we need to be thoughtful in the use of really precious resources. But I've also seen firsthand here in my communities, and I know so many other places, that literally we've got thousands of Oregonians who in the space of a few hours have seen their homes, their hopes, and their dreams incinerated. Right here in Lincoln County, we've got approximately 400 people still in motel rooms being paid for by the Red Cross. And I'm glad to hear from Director Salazar, and I had also heard through our own emergency management people that efforts are being made to extend those motel stays as long as possible. But I've heard from some of these folks who are saying, well, gee, what happens when these dollars do run out? What happens when they come back into a community? I believe our rental vacancy rate here in Lincoln County is still hovering at about 0.75%. You know, I tell them that a lot of people are actively working on this, but I really wish I had something more tangible to tell them right now. And just to be clear, I am not suggesting that we throw out the rule book, but as we have been doing these last few years, we need to keep rewriting it, adding new chapters. So many Oregonians are depending on us now more than ever, but I know that we will all rise to this challenge. Thank you. Thank you all. And unless there is anything else for the good of the order, believe it or not, despite all those glitches, I think we're right about at our scheduled 12:30 adjournment time. So I will adjourn the meeting at this time and look forward to seeing you all in a month.
Thank you, Council. Have a great
Thanks,
Friday
everyone.
and weekend.
Bye-bye.
Bye, everybody.